Good evening, everyone. I, C.A. Saurabh on behalf of WRC, welcome you all in this reference course on internal audit of SMEs by SMPs. So, to begin, first, I request everyone please place their hand on heart for ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Welcome back. So today we have a very important topic in this reference course on internal audit of SMEs by SMPs. Internal audit function has potential to improve operating effectiveness and improving the health of the organization for achieving long-term sustainability for SMEs in India. Whenever we are going for internal audit of SMEs, we always have opinion, or you can say the management have opinion like that. This is burden to our organization. But we professionally have proved in practical ground it is wrong. However, many SMEs aware of ground reality with their own form and act and can add value to an organization by operating effectiveness and safeguarding of assets that we have proved on ground reality from the internal audit. So with this basic background, I now would like to welcome Chairman of Internal Audit of WRC, C.A. Murtuza Kachwala. He is the past secretary and well-known personality for our institute. Now, Murtuza is over to you.
Thank you, Saurabh. Good afternoon to all. Chairman WRC, C.A. Manish Gadia, Percy from IIM Mumbai chapter, Adithya Bhat from IIM again, Nehal, Rachana, who very well coordinated the whole program. I will say architect of this program, and with support, of course, from Percy and Adithya again, and C.A. Satyajit, Ghoshal sir, welcome, and Ashish Jain, my dear friend. Ashish also has been supporting us always as a panelist moderator. Welcome all, and I also welcome all the participants. Really very happy about the joint program with IIM Mumbai chapter, and all credit to IIM Mumbai chapter for the whole designing of the program, and really interesting topic. There is a lot of interest now by smaller firms, and there are opportunities also with SME organizations who do not have a very huge budget for big firms, and the opportunities are growing. And whether we say 2 audits a year or 4 audits a year, but people are interested in knowing the processes, putting the risk and controls in place, and I think a very timely and well-designed program for people who are starting the journey as internal auditors. People who could be doing statutory audit, taxation, but they want to build their career. And here we are trying to bring up those opportunities also, and taking an opportunities. So many are coming to ensure that the experts from industry and firms to ensure that people slowly start learning those smaller tricks and they start doing their work. We at WRC also done 2 important things this year. One, under the leadership of WRC Chairman Manish Gadia, for the first time we started an internal audit study group. and Nehal, Rachana here are also member of the Internal Study Group. And the Internal Study Group currently is meeting virtually once a month, and where we have a 1.5 hour session where like one person from the study group, he leads a conversation on a topic, be it a project audit, be it a procure to pay audit, and we go into the minutest detail because study group is a place where people come and learn. And we will soon, if not February, in March we'll start moving to physical, where like on third Saturday of the month we'll all be meeting in one of the rooms in WRC BKC building, and we'll be physically like interacting and learning from each other. And people who are from outside India in that group, we got about 80 registrations or members in the study group right now. We'll also do a broadcast for them so that they can sit at their home and listen to it for people who are from outside Mumbai. So this is one interesting thing. And Bakin Parik from Hinduja Group and Purvi Malani again from CNK are convener and co-convener, and so many. Like I said, Nehal, Rachana, etc. also attend and they share their views. So really grateful and good, like lot of good feedback which I'm getting. The second thing which we also tried to do at WRC, maybe first time we are coming up with an internal publication, which will be released maybe in the next 8 to 10 days. And good contribution. Nehal is one of the contributors there also, and it has come out quite well, the book. And again, it is like as we call a handbook or a guide for internal beginners. That way, I will call it. And as we speak, we are also trying to finalize one more publication on risk management, and we'll try to release both this publication under the leadership of Manish Gadia before he completes this term, maybe in the next 8 to 10 days. So thank you, Chairman, for allowing us to do the good work. And he was also grateful in allowing us to do a joint program with IIA. And I think this is second. And Percy, Adithya, thank you very much for like allowing us to jointly do with IIA, and I'm sure we'll do a lot more in the next 1 year and the next 3 years. So thank you, and over to you, Saurabh.
Thank you, Ghoshal. And now I like to invite very dynamic personality of WRC, the chairman, Manish Gadia sir, for his opening remarks.
Thank you, Saurabh. C. Murtuza Kakala, Chairman of Internal Audit Committee of WIRC. Rachana from IAA Mumbai chapter, and it's really a great pleasure for WIRC to holding this second this year jointly with IAA. Previously, we decided to have this program on physical mode, and accordingly, we have structured this program for 2 full days. But later on, the situation changed, and you all know that the Corona position, the restriction is of only 50 participants. So that's why we have thought of converting this program into virtual mode. And I am very much thankful to all the faculty and panelists that they agree to revise structure, revise schedule also. So WRC did various program and various initiative as far as the internal audit is concerned, which Murtuza Bhai has already discussed, told about the internal study group, internal audit study group, the books which are in pipeline and we will publish maybe in the next week or maybe in next 10 days. Apart from that, various program also we did this year as far as the internal audit is concerned. So this is a newer area of practice, actually not a newer area, but what most demanding area of practice I can say, and which gives a huge benefit or to the corporate who are engaging us, and now SMP also require this kind of services. That is what our focus area is, that how this internal audit risk assessment can be done for smaller and medium organization also. So keeping this in mind, we have structured this program jointly with the IAA. Specifically, thanks to Rachana Madam for structuring this entire series on single phone call. So really thank you, and looking forward to have more and more program with IAA. And I also thank once again all the faculty and panelists for accepting our invitation, gracing the occasion, and ready to share their knowledge and experience, which will really benefit to all the participants. Thank you. Over to you, sir.
Thank you, Chairman sir. Now to start the sessions, I'd like to introduce our moderator, Percy Amalsadiwala. Percy is a chartered accountant from ICI, a certified food examiner and a master in commerce from Mumbai University with more than 20 years rich experience in governance related areas of internal audit, ethics and compliance, and in investigations across a spectrum of industries. Percy is currently associated with a leading global technology conglomerate in their Middle East, Africa, India regional compliance investigations and regulatory team. Prior to this, Percy was leading the compliance and investigation activities at ACC Limited. Percy has also worked with Mahindra Group in the internal audit function and gathered consulting experience with Deloitte in statutory audit. Percy is currently the honorary president of Institute of Internal Auditors, India, Bombay chapter, and has been associated with the institute for over a decade. He is also a regular speaker at several international industry and corporate firms. Welcome, sir. Now over to you, sir.
Thank you very much, Saurav, for this kind introduction. Thank you at the outset. Let me thank WRC Chairman Mr. Manish Gadia and CA Murtuza Kachwala. Thank you very much for giving IIA Bombay chapter this opportunity to have this joint program with WRC in this space of internal audit. Which is very relevant for the SME industry and for the SMPs of the institute. So thank you very much. A small announcement from IIA Bombay chapter side. We do have a website. Do check the website for our programs which we have. We are going to have our IIA India National Conference on the 2nd and 3rd of March. The theme of the topic is very relevant for internal audit. Future ready is the theme. So I would urge you to please, start registering yourself for this much awaited national conference. Now, going into this topic of panel discussion on opportunities and career options for internal auditors in the industry and consulting space, I would just like to give a small background to it. There has been a lot of discussion around the role of internal auditors and their increasing expectations from various stakeholders in SMEs. Most of the information readily available essentially provides perspectives on roles played by internal auditors in large organizations, which already have established systems and processes. What is interesting though is to study whether the same concepts, audit tests, audit procedures can be applied for even smaller enterprises, or whether the role of internal auditor in such setups needs to be tweaked in order to meet the demands of the organization. Needless to point out the importance that the role needs to be independent of operational or financial responsibilities. The probability of internal auditor getting involved in more proactive work can also be enhanced in the SME industry. Typically, an SME is riddled with plethora of challenges, such as absence of sufficient time span or resources for proactive risk management, issues revolving adherence of legislations and pressure from competition, lack of adequate resources to track and enhance customer and brand loyalty, inability to attract and retain talent, difficulty in raising funds at competitive rates, absence of adequate time and effort to invest in cutting-edge technology and processes. To add to it, the SMEs also cannot have the luxury to accommodate budgets for seeking expert advice from leading consultants or the big fours, so as to say, and therefore the opportunity for SMPs is phenomenal. An internal auditor can play the role of an all-rounder, so as to speak, and chip in with valuable advice to mitigate some of the challenges faced by SMEs. Some indicative roles an internal auditor can play are act as a bouncing board to the management on key risk management decisions, assist in identifying areas of cost and manpower optimization, keep track of developments in the field of economy, commerce and legislations and track its potential impact on the company, bring about a pragmatic approach to implementing systems and processes, and help in deploying tailor-made best practices that are suitable to the needs of the organization. To sum it all up, small and medium-sized organizations are not adequately staffed or resourced to take on multiple jobs and best practices. In such scenario, there is a constant need for someone to evaluate what is best suitable for them and which will be more beneficial to them. The management is more occupied in handling routine matters and at times is not sufficiently equipped or capable of dealing with all facets of changing external environment. An internal auditor should act as a friend, philosopher, and guide and help them through this maze by adopting more sustainable practices. With this, now I will introduce the panelists and in no particular order. CA Ashish Jain. Ashish is a chartered accountant with experience of over 2 decades in leading audit, risk management, governance, corporate finance, forensic and compliance functions across large corporates such as Philips, Godrej, Mahindra Group and Total Energies, covering India and international operations. In his current role, Ashish is the Chief Internal Audit Officer at Nayara Energy, which owns and operates India's second largest single site refinery and the largest private network of 6,000 plus retail fuel outlets with over $12 billion revenue. In his previous role, Ashish was heading audit and governance role at Shell India's upstream operations, which included Gujarat Gas, Mahanagar Gas, Hazira LNG, in addition to a JV with ONGC and RIL for operating oil and gas fields in west coast of India. Ashish has headed the governance function for Southeast Asia region as well. CA Satyajit Ghoshal. He is a chartered accountant from ICAI and MBA Finance and Marketing from XLRI. He has over 30 years of global experience in corporate finance, accounts, taxation, audit in multiple industries like automobile, steel, pharmaceuticals, glass and chemicals. Currently, he is the Chief Internal Audit and Risk Officer at Tata Chemicals. He has spent about 5 years in Tata Steel before joining Tata Chemicals. In his 17 years of service in Tata Chemicals, he served as the financial controller for the fertilizer business for 5 years and worked as Director of Finance in Tata Chemicals, Kenya for 2 years before taking up the role of Head of Corporate Taxation and Insurance in Mumbai from 2011. He is a certified Tata Business Excellence Assessor and has done over 5 assessments. He was awarded CFO Next 100 2020 award in December 2020. CA Adithya Bhat. He is a chartered accountant with over 28 years of experience in governance, risk and compliance functions, and he is currently the Chief Risk Officer at a leading conglomerate in India. Immediately prior to this role, he was a partner at a Big Four risk consulting practice in India, responsible for leading the enterprise risk management services and partnering with leading multinational companies in areas of GRC in India, North America and Middle East. In addition, in an honorary capacity, Adithya is the President of Institute of Internal Auditors, India, which is affiliated to IIA Inc. USA. And apart from being a CA, he is also a cost accountant and a certified internal auditor. And now we introduce the lady, CA Nehal Shah. She is a fellow member of the Institute of Chartered Accountants of India, a certified internal auditor, certified information systems auditor, and holds a diploma in information systems audit as well. She has done a course on forensic accounting and fraud detection from ICAI. Currently handling internal audit GRC vertical within the firm CNK and Associates LLP. As a partner, Nehal has an experience of 23 years in the field of internal audit and assurance services, covering the entire gamut of service sector, healthcare, shipping industry, banks, financial institutions, insurance companies, mutual funds, AMCs, non-banking financial companies, corporate broking houses, etc. She leads assignments covering internal audits, process reviews, restructuring internal financial controls review, risk assessments, systems review, and forensic reviews or investigations. Prior to joining CNK and Associates, she was associated with AJ Shah and Company in 1997. In AJ Shah and Company, she strategized to establish a niche practice area catering to GRC, internal audit, and advisory services to the capital markets segment. She is a chairperson of Institute of Internal Auditors Bombay Chapter Women Circle, also the vice president of IIA Bombay Chapter. She has spoken at seminars organized by WRC and IIA. Currently, she is a member of Internal Audit Committee of WRC. Already CA Murtuza mentioned that. And she was also a member of the Professional Development Committee of WRC previously, and has been a member of HR Development Committee of TCAS. Now, without further ado, let us get into the panel discussion. So my first question is to Nehal from a consulting perspective, and Mr. Satyajit Ghoshal from an industry perspective. What does a career as an internal audit look like? If you can share your thoughts.
Firstly, I would like to WRC and can you hear me?
Yes, Nehal, please go ahead.
Yeah, I would like to thank WRC and IIA for giving us this opportunity, and thanks Percy for the kind introduction. As you rightly mentioned, government has introduced plethora of measures in promotion of SMEs, and they are one of the fastest growing sector as of now. Any growth until settled will need experts' help in creating processes and framework. From consulting perspective, it has a good prospect definitely and opportunities. If you have a good eye for the risk and control, would say it's a very good option. It also has a wide array of services linked, like process restructuring, operations, effectiveness and efficiency study, forensic, system audits, apart from regular internal audit. This specialization can be done with additional certifications such as CIA, DISA, CISA, FAFD for deeper understanding. From SME perspective, there is a tremendous scope and opportunity since many SMEs don't house this expertise in-house. So in my view, it has got good scope. Over to you, Percy.
Hi, Satyajit here. Thanks WIC and Institute of Internal Auditors, and I welcome all the audience and participants who are there for this seminar. Welcome to all of you, and in fact we are all here because of you, and it's your forum, so I expect all of you to note down the points and raise relevant queries, because none of us are that much expert, and the questions only will be, enrich you and take you forward. So as far as Percy, I take your question that what does a career internal audit look like in the industry? So I think I have got a couple of very specific views on this. I think is not internal audit is not everybody's career. Let me be very frank and with the entire team. It's not everybody's ball game to be in internal audit function. Okay, all of us are chartered accountants. Have got many options. Have been into various areas throughout our careers, and I see the entire panel is over 20 years of exposure into multiple areas. So I think there are three basic qualities that one individual should have to be a fit for internal audit, to be eligible, first of all. Then we'll look at the career. So I think the first characteristics is the communication skill. So you need to have a superlative, verbal and written communication skill, including in English. That's a primary ask for an internal auditor to be successful in any organization. That's what I personally feel is the first requirement. Second, I think, is the confidence. If you have the confidence to talk to the senior management, MDs and EDs of the company, and the audit committee chair, then with the right body language and understand what they mean, I think that's a second eligibility for a person to be at all looking at internal audit. Otherwise, stay away from internal audit. This is not your ball game. And third, I think, is continuous learning. If you are not happy with learning, and if you think that I have done my CA and that's good for life, so I think this is not profession, is not for you. So I think internal auditor requires these three primary eligibility criteria. Now, once you meet that, I think then the question comes up whether you have a good career in industry or in practice. As Nehal said, she articulated very well the requirements in the practice. I'll say in the industry, I have got 2 points to mention here. First is that in industry, it's a very good starting point as a career. If you want to enter the industry as an internal auditor, this is the best place to be in, because you get exposed to multiple areas, functions, depending on the size and scale of the organization you are entering into. So that's a wonderful thing. However, second word that I'm going to say is not very encouraging. That is that in industry, because of digitization and multifarious activities which is happening, there's two trends which is developing. One is called co-sourcing. That means you have a core internal audit team and you have co-source with the external firm. And second, you have a outsourcing, which is totally the job is given to outside. So if you want to be a carrier in the industry, so I'm not very sure whether you should at all aspire to be doing that in your career. And third point, just to close my understanding, is that you need to be, as a chartered accountant, be very flexible. Once you enter the internal audit thing, you should not be very adamant that I'll continue only in internal audit. So you should be flexible enough to move into areas where the organization needs you if you want to be in industry. Otherwise, think over again. Thanks, Percy. Back to you.
No, thank you very much, Satyajit, for these really valuable thoughts. It is not everyone's ball game. And precisely, I like the point which you made about continuing professional development. Now that goes with any profession, and specifically, I think Adithya will share more thoughts on that. But as per the standards of internal audit laid down by IIA, CPD, continuous professional development, is a must for all internal auditors. So thank you very much. The next question I would like to ask Ashish is that are there any special considerations which one needs to know from a small and medium enterprise perspective about internal audit career?
Sure, Percy. So first of all, it's a very good question. But before I take that on, let me just thank IIA and WIRC for having me here, and a very warm welcome to all the participants today evening. And also, I would just like to give a small disclaimer that the views are absolutely personal. I'm not representing any of my current or previous organizations. So that being said, I think when we look at the SME sector in India in particular, it's very important for chartered accountants in generally and then the audit and risk professionals within the SME sector to understand that they need to have a very good lens on the macro factors that impact the SME sector. And the reason why I say that is because the macro factors have a significant, disproportionate and adverse impact on the SME sector. So, just a case in point, we've seen the crude prices being highly volatile in last 1.5, 2 years, and we've seen that impacting the entire energy basket. We had a situation where coal was almost not available in October, and that really had a huge impact on the availability of power. Now it is the SME sector which gets impacted immediately and very significantly. So it is really important, for the risk and audit professionals who are serving this sector, who to have a very good understanding of how the macro factors are going to impact their respective organizations. Now, globally, if you see, there is an onset of inflation. We've seen what happened in Turkey. We've seen unprecedented inflation in US, and that obviously is going to trigger interest rate increase, and obviously it is going to come to India sooner or later. So that again is going to have again a huge impact on how the SMEs have their ability to manage their working capital. Any which ways they always have a challenge to get funding, and this is only going to add to the troubles. So it is really therefore important for the risk professionals to have a very close sort of understanding of how the strategy of their organizations are being developed, and more importantly how the required course corrections are being made at the right time so that they can preserve the value of their organizations. And that's really important, not just for the professionals serving the SME sector, even for the professionals who are associated with the larger set of organizations. It is really important for them to take a note of how the SME sectors in India are getting impacted because of the macro factors, because a large portion of their customer base or their vendor base comprises of the SME sector. So for instance, in case of a rising interest rate, how and what changes required to be made in their credit policy, or for that matter their ability to support the working capital of those counterparties becomes very important, and a piece of their risk mitigation strategy. So that's the very sort of a broad expectations from the professionals serving this sector. But coming to the more granular ones, I think if I were to take a look back of 5 to 7 years, the biggest disruption that has happened in the Indian economy has been the digitization. And that may have been kicked off by demonetization, and then you had the rollout of GST, which basically completely disseminated the cash economy. And the SME sector was a big contributor to that. So that obviously did impact the SME sector more than anybody else. And then along with that, you had so many bank accounts getting opened under the Jan Dhan scheme, and then you had easy and affordable availability of internet. So all of this has contributed in a much big way about how the Indian economy could be digitized. So if you look at the retail space, almost every point of sale today has ability to do digital transactions. It was kind of unseen or unimaginable even 5 years back. Even the street vendors today have ability to do digitized transactions. So therefore, coming from the perspective of the risk professionals serving in the sector, it is really important for them to get their technology investments right, and that's where they can really add a lot of value to the company. The more often than not, I think the chances are that either the organization would overinvest or would underinvest, and in both the scenarios they would really be destroying value. So the role or the contribution from the risk and audit professionals in these sectors would be to have a very good sense of what is the fit for purpose technology and automation model that their organizations can get into, and how that investment is resulting into effectiveness of operations or effectiveness of controls. And that's really something which is expected as well, given the fact that they have a good insight of the operations as well as the processes outcomes and the regulatory requirements of that ecosystem in which they are operating. The third set of factor that one can look at primarily is what I've seen again in last 5 to 7 years, is that many large organizations are now doing a big catch up in managing their risks relating to ethics, sustainability, safety. And what that really results into is that it kind of comes to how then the counterparties that they work in their setup are actually managing these risks. So therefore, most of the SME sectors who are working with the large organizations would know that the matrices are changing from financial and technical performance more towards the safety performance and ethics performance. So there again, the professionals who are serving this sector can play a very big role in setting up the right set of frameworks so that their organizations are able to mitigate and manage these risks effectively. And of course, that also adds to the governance of these organizations, which again helps them to be setting the foundation for A, the risk which comes from the economy, and B, the growth trajectory. Now, the case in point is, if you see the tech startups in India that have become unicorns, and the kind of valuations that you see has really changed the template for growth of the SME sector in India. So they are realizing the opportunities that they have, and I think the professionals who are serving within this sector can really help these organizations to set their control frameworks aligned to the growth trajectory of these SMEs. So I think that's my major views over here.
Oh, thank you very much, Ashish. Very relevant views which you shared, especially linking the digital disruption with the SMEs. That itself is of paramount importance in the coming decades, I would say so. So thank you very much, Ashish. My next question is to Adithya Bhat. In the capacity of IIA India as IIA India's president. Now, how has IIA as a reputed international institute, widely recognized for the professional practice of internal audit, provide revenues in the field of internal audit? Adithya, you are on mute, I guess.
Thanks, Percy. Thanks for the kind introduction, and good evening to all participants. And you can't hear me?
Can you?
Okay. Can you hear me now?
Yes, we can hear.
Okay, perfect. So thanks, Percy, for the kind introduction, and good evening to all participants. And again, thanks WRC for giving this opportunity. I'm really honored to be a part of this panel. So it's after a long time I've actually come on to an ICAI IIA panel. So I must say that, first, my basic foundation or my basic education is chartered accountant. I'm a chartered accountant and I'm proud to be one, right? So when I did my CAS and when I chose to do CA as a professional education, there's a lot I learned, I learned a lot in statutory audit, internal audit, corporate finance, tax, and various other elements as well. But after a point of time, you start aging, and everybody gets his glasses. Somebody gets at the age of 40, 30, somebody gets at 50. So I got my glasses, at the age of 40 at one point of time, and that is what I call is my CI, Certified Internal Auditor. So, I did that so that I could see the data and the transaction a little better. So everyone has to polish herself, everyone has to sharpen her tools, and that's how I sharpened, right? Now, jokes apart, why did I do my CIA from IA? I was in North America. Actually, I had moved to Canada for several years, and there I found a challenge, right? They said, okay, your CA is not acceptable. You may be a great guy from a great organization back home in India, but we don't know you. We don't know your country. And then, I actually got my CA, and I'm a cost accountant as well. And the feedback I got from the educational bodies out there that I'm an undergrad, and that really upset me, with several years of experience. Then I took it up as challenge. I said, okay, let me do something that has a global recognition, so that I don't have to bother. Why should I restrict myself to North America? Maybe my future takes me to Europe, Asia, wherever rather than India. So let me do something, and that's when I discovered there's something called Institute of Internal Auditors, and they focus on internal audit and nothing beyond that. As I said, okay, everybody says be focused, and if all of you are seeing Shark Tank, what are the sharks saying now? Focus on one, don't try to go elsewhere. And I said, yes, internal audit is the one for me. Let me focus on it, and that's how I got it. And I did that. There was a reason for me to do my CIA. I did that, cleared it in first shot, okay. And let me be very honest. I'm not that smart guy as such when it comes to education. I don't like to read. I don't like to do anything. But still, I cleared it in the first attempt. So what that means is, if you have the right experience and you have the right acumen to do it, it is the easy examination for you to get, because they're testing you on your practical knowledge and not on your theoretical knowledge. Okay. And then I realized, okay, if you look at IA, what did I get? I got a global recognition. So today in my profile, when I say I am a certified CA, CIA, people like that, when I send my profiles wherever internationally. That's one. Second thing, I said that they give me training programs very specific to my needs, because my role today as an internal auditor or a Sarbanes-Oxley auditor or a management auditor or a chief risk officer is more on internal audit, internal controls. And that's what I get from them, right? And plus, it enables me global mobility today. Today, I don't have to bother. If I have to even immigrate to Australia, and if I say I'm a certified internal auditor, they accept it. They give me some additional points there. So these are all the sort of reasons. But the most important one is you need to continue. Even Ashish, even Satyajit said that you need to do continuous education. You need to keep learning, right? And you need to learn what is relevant. So since I have chosen internal audit risk is the place where I want to be, I need to keep myself updated. Otherwise, I'll become redundant at any point of time. And I thought IIA gave me that opportunity, and I really don't have to look searching that which is a good program for me. All programs are good. So that is why I chose to be a part of them. My journey with them has been since 2006, and this year, because of my association, I got appointed as a president. So that's what IIA is about, and that's what we can expect from them as well. Trainings, global recognition, global. Thank you. Percy, over to you.
Thank you very much, Adithya, for linking your personal experience to what IIA has to provide. That those thoughts were really very relevant. I'm sure it would have helped the participants as well. So now this next question would be open to all the panelists. I would ask Adithya Bhat to first start with it, and then Nehal, Ashish, and Satyajit to take it over. So which would be an appropriate model for internal audit delivery, whether it's in-house or co-source or outsource, and why? And would there be any special recognitions industry-wise or for small and medium enterprises?
Right. So very good question, Percy. And when I moved to internal audit, that's a debate I always have when I was on the other side. So till a few years back, I was on the consulting side, and now I am on the other side, which is the industry, right? So when I was a consultant, when I go and try to sell my saying that, okay, I'm a great internal auditor, I really need to demonstrate why me, why not someone else? How can I add value to an organization which I don't know, right? So that's always been the challenge. So, over a period of so many years, and you started doing rudimentary IAs and you gradually upscaled, upgraded yourselves. What I realized are three things. For you to add value, everybody looks for value, whatever it may be, right? You need to have a deep understanding of the business, whether it is oil and gas, whether it's power, whether it's retail, consumer product. Unless you understand the business, you can't do it a lot. Satyajit also highlighted that you need to have those skills. Second thing is the business model in which that company works. Every business model different. Even if you take two pharma companies which are generic of the same size, the business model could be totally different. One could be doing manufacturing, one could be sort of doing contract manufacturing, another could be doing a loan licenses. Similarly, different types. So unless you understand that business model, which could be technology driven, you can't do it. Third, but the most important one is the culture of that organization, right? We have in India multinationals, we have Indian multinational conglomerates, government companies, SMEs. Each one, the culture is different, and everything has to link to that culture. Otherwise, it becomes very academic when we do internal audit, right? Now, when I look at all the three, okay, of course, I would say something different. I would love to hear what Nehal says here, but I would say totally outsourcing something to a third party becomes ineffective, right? Sometimes when internal audit is not your focus area as an organization, then probably you can do it, okay? The best thing I would say is you need to have an in-housing, again, depends on the size and the scale, to understand your business model, as well as your culture very well, and then go for a hybrid model, right? So there are various steps in internal audit. The first thing is you do a risk assessment, which area is critical for you. Now it's good to get an outside view on a risk assessment, right? So for that particular piece of work, you could probably, sort of outsource it to someone. And then you go ahead and decide that these are the 10 areas which I'm going to cover here. Some of them might be specialized, like the treasury, like a hedging, commodity, credit risk, market risk, whatever it could be. Those could be outsourced because you may not want to invest in that skill, because if you invest in that skill and competence within the organization, there may not be any career path for that person. And other areas which are very, very core to the business, something which you should do in-house. If you're short of staff, you can sort of co-source. You can take a resource on a loan staff from someone, but controlled by you. So over this years, I think this is the best model. But again, priorities are different, objectives of doing internal audit are different, and management takes a different view at different point of time. But whether it is SME, large, small, I think this is the one the percentages could change. Thanks, Percy.
The very good points, Adithya, you have made. It's always a dilemma for organizations whether it is for in-house, co-source, or outsource. In my view, for particularly for SME sector, outsource would be cost effective because that is always, again, what kind of budget they have. Then vis-a-vis developing that kind of expertise in-house. So that could be the driving factor as far as SME is concerned. For example, different skill sets required for writing SOP than system review or creating ICFR framework. So it requires different capabilities, absolutely. So consultant also bring in tailor-made best practices for SME, considering particular sectors and industry. So with budget constraint, as Percy rightly mentioned, internal auditor can be all-rounded. So in my view, outsource would be a good model. Not because I am from a consulting firm, but from the cost benefit analysis from SME point of view, that would be the right model. Of course, there is not a perfect answer to all the organizations, but yeah, largely.
So I go next, Percy.
Yeah, it would be interesting to hear the perspective now.
Okay. So the answer is that there is no right or wrong answer over here. It is very so let me put it in a different way. I think what Adithya said is absolutely right, that the hybrid model is the base case. Yeah, that's the default best case scenario for whether it is SME, large organization, irrespective. Now what matters is that what is the expectation of the management, what is the life cycle of that SME, what is the growth trajectory, who are the investors for that particular SME. There are many factors which go into the play to decide what exactly would be the most efficient and value adding structure for that SME. But having said that, obviously there are certain points of consideration. Point number one, if there is been no internal audit function at all, it will be too difficult for somebody who's just coming organically to set it up. So there, of course, it makes sense to outsource it for a couple of years so that all the best practices could be brought in at a much economical and a much value added way, and then of course to build from that best practices the organic function, and then decide which pockets, as Adithya mentioned, where a specialist is needed to kind of bring in that that perspective from outside into the organization. And of course, if it is a very established or an SME where most of the departments are very well set up and expectations are pretty clear from the stakeholders, then of course then the in-house function can be the key driver. And then as you mentioned, Nehal mentioned that the expectations are multiple in an SME sort of an environment. So then that really helps then to sort of bring in that complete value proposition in terms of decisions on technology, or for that matter in relation to setting up the risk frameworks or setting up certain other policy related environments for the organizations, which again, as an internal auditor, you would always have the competencies and the knowledge of the business and the ecosystem to help the organization with. So I would say that it is highly subjective question, but yes, I mean there are certain very clear points of consideration, and it does require a careful analysis or careful assessment of those considerations. Otherwise, the risk is that people may think that audit is not able to deliver, and that will be kind of a big setback. So it's really important to come to the right decision based on those considerations.
Yeah, Percy, I'll go next.
So I think all views are already on the table. So 2 points to start. I think first point I'll mention here is that the job of an internal auditor is what? Is typically to bring in issues independently and objectivity. So this is a trait. Okay, so that is one, just to remind everybody of that. So that's a job to be done, whether it's an internal or external, right? Whether you outsource, co-source, whatever. You have to be independent, you have to be objective. So that's one. Second is that I think in the current times, the times are changing very fast, and the technology is taking a big leap. So technology is our third partner, whether it's in-source, outsource, but technology is a compulsory thing to be there, and that is doing many of the jobs what internal auditors would take pride in doing. It's making the job easier. So that comes along with the internal audit, whatever it's in-source, outsource. So now coming to specificity, whether it depends on the industry or the kind of ownership structure the organization has got or not. So I've got some specific views I'd like to put it there. I think from a SME perspective, I tend to agree with Nehal that SMEs would definitely benefit from an outsource model because of the reasons he mentioned. It's cost efficient, effective, and it will deliver value to the SMEs who is looking for a one-stop shop for all such this thing. However, from a company perspective, from a manufacturing, from a, let's say, go to the big industries, there are two sets I like to divide. Is a manufacturing setup, is a non-manufacturing setup. If it is a manufacturing setup, I think with my experience in larger manufacturing organizations, I feel a co-sourcing model would be very good, like Adithya mentioned, and I'll give a rating of around 40-60 is the in-source and 60% from outsource, and depending upon the area of expertise that he mentioned, that treasury and other areas can be brought in, and even the analytics part, which is playing a big role, can be brought in from the outsource partner. And the only the rider here is that the partner has to be very carefully selected, who should have the backbone to support all those analytical things. So that's for a manufacturing. And for a non-manufacturing like IT kind of a company, which is a large industry IT company, I think 20-80 would be the ratio I'll put it. The 20% in-house and 80% outsource, because you don't have to run around into manufacturing sites all over the globe for that purposes. And the last point I'd like to mention that if it is an owner-driven organization, which is, many are, so in that case, if they're not going for outsourcing, then in-source would be a good model. Then he would like to keep many things with himself, in order to, for the benefit of the organization. In-source totally for a owner-driven and controlled organization could be a good option. So these are my views on that. Thanks, Percy. Back to you.
Thanks, Satyajit. Thank you all. Very interesting and equally poised views. Two of them said hybrid model, and two of them said outsourcing, complete outsourcing model is a better option. So, it was really a good, fantastic viewpoints from all the panelists. Now, my next question goes to Adithya and Nehal. What are the typical value-added services which internal audit function should provide extensively by using consultants? Now, this question is basically since you both have been largely consultants all throughout your career, so from your perspective as a consultant, you could throw some light on that.
Yeah, thanks, Percy. So, when I got into doing my CA, in the 90s, when I did my articleship, somewhere there was a bunch of us in groups. I'm a commerce graduate, so some of us went into CA, some of my friends went into MBA. The first thing I learned somewhere was, it says chartered accountants or accountants should be watchdogs and not bloodhounds. That is what I heard somewhere, I read somewhere. And the friends doing the MBA, they're so smart, they started calling me, yeah, so basically you're a dog, in short. Okay. Then I thought it is long gone and forgotten. And then 25 years later on, when we saw a lot of business failures, somebody commented, now we have become pet dogs. Okay, and that thing came back again. So nothing has changed, So we've been treated as dogs. We are dogs. Okay, that's how I took it. Okay, and as Ashish said, I forgot my caveat. These are my personal views, whether I'm on this panel, whether I'm at work or whether I'm at home. Every time it's personal because you need to back out at some point of time, for domestic peace, as they say. Okay, so I think the perception people have, that internal auditors are a problem finder or a problem creator, right? Every time they say that, they feel that we don't understand the business. You're here, you're trying to, take away my bonus, or you're trying to get some brownie point. Now, that's the perception that we all need to change, right? People should understand and appreciate that internal audit is a program. It's a vigilance program, and our entire role is to say or see that everything is operating in a plan.
I think we lost him.
Having said that,
Yes.
because we are internal auditors, we have access to all document processes policies, and that's where our strength lies. How do we use that for the benefit of the organization? How do we drive that particular value? So I would say 3 or 4 things. Since we have so much data with us and we are technology savvy as well, how we can sort of show trends to the line of defense owner, to the business, so that they can make better decisions going forward, which can add to their. You can hear me?
Yeah,
Hello?
we can hear you.
Okay. Okay, just a second.
Yes, we can hear you.
You can hear me, right? Because my screen just disappeared in front of me.
Yes, we can hear you, but your video is off. No problem. You can continue on.
Correct. So use of data to store trends to the LOD1 enable him to make better decision. Second thing is there's something called process mining, which is again a consulting word, but it means looking at the data and how it flows through a process, just to ensure that the SOPs that you have or your delegation of authority that you have is relevant, pertinent to the current business. That's also very important for someone to assess. The same data which we can help provide a better business decision to the LOD1 can be used for us as red flags or as some symptoms of sickness that's likely to hit us. Like we have a thermometer, like we have an oximeter, the data can say that. And last but not the least, we keep talking about technology, and technology is here to stay for some time. How we use technology for continuous monitoring and how we use technology for continuous auditing. These are the 2 elements that needs to be said. Now I have one last theory as well. We have people saying that data is the next oil, right? That's a trend. And also there is another bunch of people saying oil is polluting. So can I say A is equal to B, B is equal to that, A is equal to that, data is polluting? Now that probably 4-5 years down the line, we'll be probably having this panel talking about how useless data is because it has violated all our privacies and personal matters. So I would like to end here. Thank you. Over to you, Percy.
So just to add what Adithya said, if I have to name few value-add services, one could be health check review for compliances, various compliances, what is applicable to that particular organization. Could be company law, GST, TDS, employee-related, environmental-related, process reviews and control improvisation, SOP documentation, and even to map all this documentation, as Adithya rightly mentioned, whether my delegation of authority or my SOP or my RCMs, whether they are talking to each other and in sync. ICFR control testing, data analytics, also could be presumptive data analytics or based on past data for taking decisions in future, or MI structuring, ERP implementation, employee training, because that could be always a challenge for SME sector, because if we don't have people of a particular skill sets, so then that's where one can play a role, and asset safeguarding. So these are, to name few, one can look into it depending on the structure of the organization and the requirement. Over to you.
Yeah, thank you very much, Nehal, and thanks, Adithya, for your interesting dog theory. Uh, now my question goes again to all the panelists, and again it will be in the same order: Adithya, Nehal, Ashish, and Satyajit. How has the digital disruption brought about a change in internal audit delivery?
Right. So we are seeing over the last 2-3 years, so much disruptions have happened. You know, to give an example, I was very happy that I'm from Bombay, so I was very happy there was something called a gold cab that came in 2006. You can call them and you can get a taxi. Then it went to Olas and mega taxis. That was even better. They could actually send me an SMS with the driver's name and all that stuff. Whereas gold cab was actually calling and they went out of business. And suddenly the Ubers and the Olas came and these guys have disappeared. So you have seen that every business model is getting disrupted. That's one. Second thing I've seen is, again, when I did my articleship, whether it's technology, we're all asset heavy. Now it's all asset light company, right? Everything is now going into asset light models and sharing models. Okay. We started with business process outsourcing. It got a little dull. We started calling it KPOs, knowledge process outsourcing. Okay. Then we said we'll give you, infrastructure as a service. Then there was something called a SaaS model. We moved it to software as a service. Now I see there's a PaaS model, platform as a service. And last 2 weeks back, I heard two things: energy as a service and data as a, data sharing. And I said, wow, what is all this? Energy as a service means once we have sort of an electric vehicle, I come back home, I'm not using that battery, somebody else takes the battery, goes. Next day when I want to go to work, I get a battery back. Somebody's actually, so basically the same battery is getting used, so energy is being used, you're not wasting energy. Similarly, data as a service, I'm with Vodafone, and I have a 10 GB pack, but each month I use 6 GB, and in a year, it gets carried forward, but there's a limitation. Now that data I can give to another company which is approved apparently by DOT and TRAI now, and that can be used someone. So I make money, the other person also makes money. So these interesting models have come up. On-prem models have now converted into virtual cloud model. So accordingly, they're so different. Unless I upskill myself, I'll be redundant, I'll be useless. You have to spend time reading, understanding what it is. So all us, everyone in internal audit needs to not only upskill but develop newer competences, right? In the past, I when I did my articleship, it was a more British type company. They always said that there's a lady behind you, hold the door open, right? That's politeness. Today, if I do the same thing, it's not called politeness, it's called tailgating. I never learned a word called tailgating in my school. I said, wow, the same thing. There's no chivalry, no politeness for anyone. Open the door and bang it in his face. That is what is the expectation today. So this disruption has seen a lot of new things, and I think I probably come from an old school of thought. I also need to change. Otherwise, I won't be called on this panel, if you put that way. And I want to be on this panel every now and then. Over to you, Percy.
Yeah, a very good insight, Adithya. Basically, digital disruption with coming in the picture, data analytics has become an integral part as far as internal audit success is concerned. So that ensures that IA continues to be digitally proficient. This is basically can be achieved by delivering highly relevant risk and control related insights to internal and external stakeholders. IA team can provide value by supporting risk identification, monitoring, policy compliance, scoping, issue identification, sample selection, root cause analysis. This is where technology can be used in a big way. Few of the good practices could be such as include quantified risk exposure via analytics in audit reporting, to check data completeness, accuracy, and quality to deliver relevant and accurate insights. Use IA tools such as IA Charter, Mandate, Matrix, etc. And create a continuous improvement cycle for analytics results based on feedback. So that's where the entire scenario, the way we deliver IA practices has completely changed, and where technology can come handy. Over to you, Ashish.
Sure. So thanks, Nehal, and very relevant points mentioned. My take on this is very much similar. I think a couple of things have happened simultaneously. First of all, the stakeholders around internal audit are very much aware of how the technology and digitization is moving. So I don't think the question is so much on the internal audit whether you want to, digitize yourself. It's a question of how quickly and how efficiently can you get there, and then how you can move from transaction and process assurance towards more strategy and risk assurance. Yeah. So I think that's the writing on the wall, and the earlier and sooner internal audit is able to deliver on that, that's the next paradigm, for internal audit. And the other, simultaneous thing that we see, at least in the Indian context, it has always been globally, is the relevance of SOX, and then you have the second line roles which have come up. So you have a compliance role, you have a controls role, you have so on and so forth. So therefore, internal audit, this is already a crowded space, So even if you are doing full time data analysis or transaction assurance, it's really not going to be satisfying your stakeholders, because then what's new that you're bringing on the table for them? So it's more out of compulsion because of the technology disruption and because of the expectation of the stakeholders around, that internal audit has to move on from the usuals, health checks, reviews, towards more substantive issues which can actually impact the value of the organization, and how then that organization can be really made future ready. And I think that's a space which is still open, and internal audit is really expected to get to that space. And of course, the use of technology is going to be a major factor to achieve that milestone.
Great. I'll pick it up from there where Ashish left. I think most of points the other panel members have covered. I'll just put it like that. Digital disruption has really affected the IA delivery, and there are both positive sides of it and negative sides of it. So on the positive sides, if I see, the two things come to my observation. First is that data analytics tools are now much easily available and being used, so which gives a larger insight into the subject. It's not just data, it's the insight which matters in your organization, that what the insight you pick it up and what the action plan you're going to do from the data. So analytics has helped us do that, and this digital thing has helped provide much better audit evidence. So you have a better audit evidence and you have a larger insight. Audit evidence helps you do better assurance, and insight gives you a better advisory capability. So these are the positive sides I can see on one side. And the second positive I see is that newer concepts of internal audit are coming in. I was talking to somebody in US in audit board the other day, and I realized that, and then I did some homework and reading. I realized there are concepts like lean audit, 0-day audit report. I was zapped. What is 0-day audit report? They say before you even start the audit, you have the audit report ready, because analytics will give you so much insight that you can, without meeting the audit team, your report is ready. You are just your various assumptions you're just verifying by meeting them. So you meet them, the introduction call, and you say, here is your audit report. I have already done with the job. So these concepts were not possible otherwise. And third is that the digital has held a concept called continuous audit, which DBS Bank has used tremendously well. So they say that there is no audit programs anymore. Like, you don't have to prepare an annual audit program, get it signed by audit committee, then every quarter review what is the progress. You say that, guys, you keep on doing your job in business. We are reviewing you. It's like a monitor which is there, the camera which are fixed. Whenever we find anomalies, we go and sit down with the auditee and tell them, boss, there are certain anomalies we have found. What comments you have? And it's a continuously going on. So there is no external, internal, but the point is you are continuously under watch. And basically the purpose is to assure and advise and move the organization in the right path. So these are positives of digital. On the downside, I feel there are two, which I personally am very concerned about that, and I don't know how to take care of that, because since Adithya has referred a couple of times, like in our days, so I can also refer in our good old days when we did see, that point in time, our integral part in the firm where from I did was that you have to be on site. You, without doing a site visit to the manufacturing concerns, you're not completing your articleship. It's so basically, once unless the touch and feel of the manufacturing process and the physical processes which are in place of the organization are very essential. So this digital has made your life so simple. You have become a white collared in office, you do a desk research and you become a huge internal auditor without even knowing iota of how the business is done. So I can't tolerate those kind of things, because very difficult. Like who give big yans sitting on the table without even physically visit the plant even once. So out of 30 years of career, I spent 25 years in manufacturing organizations. So I know pretty well manufacturing is a different ball game altogether. You better be on the ground. So that's one. So that is coming down because of the ease of getting digital information. And second thing, I think we call B2C and D2C. Now this is one word called F2F, that is face-to-face meetings. The digital has spoiled that entire thing. Unless you have the face-to-face meeting and the body language is understood, that this guy means what and what you are meaning, I think the spirit of the audit is taking a beating in that. Half of the things you will know that when you share observations, what is the body language and what kind of diversions are coming and what is the point you're trying to arrive at. So that I think these are two big misses that especially added by COVID. So this F2F has gone altogether. It's out of blue. So whenever we do our international assignments, we always are on digital now, and so the very feel of the audits are gone. So I think these are downsides of digital. Otherwise, digital is great and we must embrace in a big way. Thanks, Percy. Back to you.
Thank you very much, Satyajit. Your thoughts were really enlightening. The positives and the flip sides which you mentioned, about the boots on the ground and the 0-day concept of audit. Absolutely bang on the point. Thank you very much. I do understand, Saurabh, that we have time, but I still have a couple of more questions, and it's been a good roundtable. So I hope I am able to continue with it.
Yes, Percy, you can continue. No issue.
Yeah, thank you. So, so my next question is typically again to all the panelists. Again in the same order: Adithya, Nehal, Ashish, and Satyajit. Typically, some of the companies do not encourage hiring career internal auditors. What, according to you, should be the right strategy for a company from an individual and a company perspective in this regard?
Right. So Percy, I'm not too sure from where you got this question. Okay, career internal auditor. I have never heard such a word. And I somehow, as I said, I'm from a boys' school, right? So we are all my friends at that point of time, they are my best friends. So bunch of us did commerce, bunch of us went into CA, bunch of us went into MBAs. And I keep arguing with them that chartered account is a professional degree, whereas an MBA is not a professional, it's a diploma for because I'm regulated, I can sign, you can't do anything about it. And I think this word has been coined by those guys, career internal audit. This is nothing, a word like career internal audit. It is just demeaning someone or defaming an individual. And that's how, I said they used to call me, hey, you are a dog, you are a dog. It's like that. There's nothing like that. I can choose to be a dog, but I'm not a dog, right? There's a big difference. So here one can choose to take internal audit as a career. And that's the path which I have taken after starting statutory audit, right? Because and I totally resonate with what Satyajit says. I'm from the industrial markets background. I've stayed away consciously from financial service. Sorry, I'm sure a lot of people here would be financial service. Because in finance, I see nothing. I see only settlements. I want to see a power plant. I want to eat the factory food. I want to see a refinery. That is the fun. If you don't do it, there's nothing fun for me. And again, that's my personality. So here, that is where my problem is, right? Now, in India, if you see some of the senior leaders who have gone to be the CEOs and the CFOs, I don't want to name, but it's all there in the public domain, and you've seen it in ICA and in a lot of other giving award. They all, in their journey of 30, 35 years, have done a role in internal audit, right? So what that means is that a person who does a couple of years in internal audit can grow to become the CEO. And to do internal audit means understand the business in depth. So for me, if the choice should be the individuals, there are certain personalities. You have introverts, you have extroverts. There are some people who don't like a change. They don't know how to do a change management. So they do internal audit. They know, okay, I keep on doing that work, rudimentary work at times if they choose to make it rudimentary, and they take it as a career. But there are people looking at internal audit, looking at the processes, looking at the factories, whatever, want to do something more. You know, they are very enthusiastic and they can rise to be the CEO, right? So I would say choice should be with me. Okay, I should be given that opportunity, and every organization gives it the opportunity, right? So for me, there's nothing like a career internal auditor.
I completely agree with Adithya. So just to give an example, like from a consulting firm point of view, when we are interviewing students for articleship, they usually not aware of what is internal audit all about. They have heard words like forensics and system review and statutory audit because that, like, signing of the balance sheets, etc. So they want to do that part and they don't want to come to internal audit. And that's what I always explain them, that if you want to be CEO of in future of some company, you should start with internal audit, because that's where you get to learn the business understanding processes and what goes behind it, because closest you can go to other side is as an internal auditor. Best of the organization, best of the functions, like, so, and in fact many organization has that as a mandatory feature. They start a person with the internal audit and then they are moved to business functions, so which is like, helps in future for them to understand the function and in making major decisions. So particularly from SME perspective, if we talk about to hire professionals with internal audit background would definitely help. It will help in support developing processes, better compliances in-house, with little or no help of consultants. So from SME point of view, it would definitely help. Yeah, over to you, Ashish.
Sure, thanks. I completely echo what Nehal mentioned and what Adithya mentioned before. Just to add a little bit more perspective over here. So I think most of the large organizations and global organizations always held this view that audit is an important pit stop in the leadership development, and if they were to groom their next batch of leadership, they cannot obviously ignore internal audit as a function to help them in achieving that objective. But the other dimension that I've seen in the last couple of years is the value proposition of audit function itself has changed dramatically. So, as I mentioned, apart from giving transactional or process assurance, the expectation is to, be on the strategy table and then help the organization develop how it looks forward. And towards that end, I think that now the focus is also to, get the mid and senior leaderships into the audit function and give them that experience of, that global experience within the organization. So apart from obviously the merits of bringing a junior leadership or junior management to get a feel of the organization, I think the expectation now is also to get the mid to senior level leadership also into audit function and keep them for a couple of years. And that's where I think it gets a little situational and subjective. So it could be either a guest audit program where you could bring specific knowledge and expertise, which is a win-win because an audit can gain from that specialist knowledge, and at the same time, that expert knowledge can get a much larger exposure of the consequences of decision making, and then how the entire ecosystem gets impacted because of that. Or to have a 3 to 4 year or 2 to 3 year assignment where one can then get into deeper aspects of challenge and change management and how that can help them in the career going forward. But I definitely endorse the whole idea that the fact that audit is an enriching experience cannot be debated. Now, whether that needs to be continued as a career or whether it is an important milestone to achieve different career objectives is completely subjective. But at the end of the day, I think audit as a profession itself is highly challenging, has lots of changing parameters now in terms of deliverables, and obviously there is a need for experts to remain within the audit function and then make sure that the professional practices and all the the developments that are required in the audit function itself are actually delivered to the organization. So again, it's nothing against people who want to make a career in an audit function. There is a huge requirement. In fact, if you see in the industry today, there is a huge crunch of people who have core audit experience, and especially with 10 to 15 years of experience, there is a huge crunch. So of course we need that exposure as an industry, as a country, we need that experience. So I would say it is completely up to the the individual's career objectives, and obviously for organization, I think all experience helps to achieve their business objectives. So I don't think any organization is going to be averse to say that just because somebody is coming from an audit experience is not relevant for that organization. At least I wouldn't think that any progressive organization would hold that view. Yeah, that's it for me.
Thanks, Ashish. I think a couple of words in this area. I think Adithya took offensive to the word career internal audit. I'll have one or two comments on that, but prior to that, I'll just put my views. I think internal audit in any large organization is probably the best place to start your career, and you got to be fortunate enough to do that because you get exposed to so many vast areas which no other function will give. So that's the first take for the newcomers or the participants who are there. For if you are in industry, I think that's the ideal thing to happen, and many progressive organizations do that. So that's a fantastic way of starting your career. That's number one. I think second thing to be success, and another thing, a perspective I just want to put it in place is that careers are not developed these days only vertically. They also develop horizontally. So earlier days you used to have that there are 14, 15 layers, you go up and you become controller of internal audit or some designation you will get, which you feel is the ultimate you have got in life. So I think things have changed, organizations have evolved, and not only from vertical growth, we have horizontal growths also. So you should be willing and open to that. Third point I'd like to mention is that internal auditor is such a job. I said in the initial thing itself, it's a very tough assignment, and Ashish also alluded to that. You require to balance two very important stakeholders. One is the management, and that to the senior management, the MDs and the top management team, and second is the audit committee. And the expectations are not always congruent. The audit committee is always looking for very independent, very objective things to come on table, and management obviously, because they are doing the best to run the organization, would like to defend the point to every extent that yes, only the relevant and the certain points only go to audit committee for debate. So that's, you have to build your credibility as an internal auditor by various skills that we have talked about earlier. If you're able to build your credibility as an auditor with the two stakeholders, that the management and audit committee, then only you have a career. Otherwise, you don't have a career internal auditor at all, because you it's a very difficult balance to be done. So I think all of us realize that. Those in industry realize much more. And finally, the word I wanted to comment on was that career internal audit, when the word has been used, I think I'm sure Percy would have done some research before putting the word. To me, it seems like the mindset of an internal auditor. Even if you move from the function, if you have once developed the mindset of an auditor, that means you look into detail. You are not a superficial level person. You look at minute details, you look at processes, you look at systems, you look at the overall value chain of a business cycle. That's the mindset. So when you say career internal auditor, that means that trait of internal auditor you carry whichever role you play in the organization. That's my take on that particular point. Thanks. Back to Percy. Thanks.
Yeah, thank you all. I think it was really a insightful discussion on especially the key word of career internal auditor. I think this is a concept generally being adopted by most of the multinational companies, and that's where this term was coined. So any which ways, great thoughts from all of you. Thank you. My next question and the last question, that is again related to some of it which has already been mentioned in this previous question of career internal auditor, and it's about it's for Ashish and Satyajit, who are from the industry perspective. From the industry perspective, what is the right direction of movement within a company and why? Whether it is from internal audit to line function, or whether you would view it as line function to internal audit as the best movement, which is your choice and why?
Well, if I can take this, so it's not a unidirectional, Percy, the way you're putting it. It is a circular world, right? So what goes along comes along. So I believe that again, it depends a lot upon what the organization expectations are and where the resources are sitting at that point in time. So if you had to deal with a situation like pandemic and COVID, and if you had the resources available in audit, and then you needed all hands on the deck, then of course every organization would like to use that resource bank into much more frontline kind of activities. And on the other hand, if an organization is towards significant risk exposures and has huge issues in settling its procedures or key processes, then of course would like to invest significantly in functions like internal audit. I would say that of course that would result into in and out movements, and at the end of the day, I think it is largely dependent upon where the organization is heading towards, what is the expectations of the stakeholders, what importance governance holds in that organization, and of course, what other opportunities the internal auditors have. Of course, the baseline expectation is that internal audit should be able to provide the next level of talent in the organization. So I think that's across the board. But then at the end of the day, whether there are talent available to bring from within the organization into internal audit, as I mentioned, would be dependent upon various factors where the organization is heading towards. But of course, I mean, there are specialist areas where internal audit will always need people who have the line function experience and who has the ability to take that judgment call as to what is reasonable and what is something which is a bit of a theoretical risk. And I think that's where there is always going to be opportunities for people coming from line functions in audit, and then obviously gain the skill set and experience that the audit function brings to provide a much larger platform and to see the organization from a much broader view, and then go back into their leadership roles wherever they think that's relevant. So I think it's a circular movement, to answer to your question in short.
Yeah, thanks, Ashish. Quickly, in the interest of time, I think what I like to say is that I totally agree with Ashish. In fact, to start with, I think internal audit is a great function to join in an organization to start your career. You learn all the nuances of the business pretty early. And if you are fortunate and the group recognizes over a period of time, you may, after doing everything in finance, you may head that function also. And that has been, for some reason, true for me. I started in internal audit in the initial of my career in one of the most reputed group country, and now I head the function in a different organization within the same group. So that's been fantastic. You know the start and you know the top what's happening. Just last point I'd like to mention, there is an alternative model available, because when I was working for a US MNC, I realized that was a wonderful model apart from this. That is called a very small core internal audit team. In fact, the entire company, the $3 billion company, had one internal auditor sitting in Detroit. And then they have all the plant controllers co-opting members for the internal audit team. So like I was heading one of the plant. So you would co-opt for a review, let's say in North America, and there'll be 4 or 5 guys picked up from around the globe, and you'll go and do the review of another colleague of yours, knowing very well that this guy may come to do your review after 6 months. So you got to be very cautious, but you like to definitely share the best practices that you're doing with him, and then would expect him also to do the same thing. So that model of working very well for that organization is one of the top organizations in the world. And I think people should look at alternative models also, where you get windows of opportunity to do auditor's role also while performing your line function. So that's my take on that. Thanks. Back to Percy.
Thank you so much, Satyajit and Ashish. Now, I will just check if there are any questions coming up from participants, and if not, then we can quickly wrap up this session. I cannot see any questions coming up. So,
सर एक भी क्वेश्चन नहीं है
sorry?
सर एक भी क्वेश्चन नहीं है सर
So we do not have any questions. I think you all have explained in well manner, and the discussion was completely wonderful. And you have covered a lot of things like career opportunities in internal audit, expectation from internal audit, and very important discussion related to in-house versus outsource internal audit or hybrid model. So that completely great in terms of knowledgeable session and highly insightful. So on behalf of WRC and IAA, on behalf of all the participants, I like to say a well-deserved vote of thanks to all the panelists, Ashish Jain sir, Nehal ma'am, Satyajit sir, and Adithya ji, and importantly, Moderator sir, Percy, Amalsadiwala ji. Thank you all for sparing your valuable time with us, sir.
Thank you so much.
Thank you everyone.
Thank you,
Thanks,
everyone.
everyone.
Really an interesting discussion. Thank you all. Thank you.
Yes. So we are now ready to take next topic of the session, continuous control monitoring and concurrent audit. And it's my great pleasure to introduce the faculty, well-known faculty, you can say, Rachana ma'am over here. So Rachana is a chartered accountant and has over 16 years of experience in risk-based internal audit, risk assessment, forensic business counseling, internal control assessment, and internal financial control due diligence. She has worked on a large portfolio of clients in various sectors, ranging from stock exchange, stock broking, real estate, quick service, restaurants, projects, manufacturing, and multi-level marketing, trust, wine, and pharmaceutical. Prior to joining Mazars, she worked with Mazars and AJ Shah, now known as CNK. She also chaired the training and webinar committee of Institute of Internal Auditor, the Bombay chapter. So with this round, please welcome our faculty of the next session. Rachana ma'am, over to you now.
Thank you, Saurabh. Thank you, WRC and IIM Bombay chapter to give me this opportunity. And Saurabh, just one thing, I don't have the screen sharing right yet. I'm trying to get in touch with. See if I can
look into this.
So thank you very much for the kind introduction, and I'll try to make it quick because I think we are, is my screen visible?
मैम
Yes,
स्लाइड
now visible.
मैम
Yes.
डुप्लीकेट कर दीजिए मैम डुप्लीकेट कर करिए मैम
Sorry.
आपका मैम दोनों स्लाइड दिख रहा है, फर्स्ट और सेकंड दोनों स्लाइड दिख रहा है, तो आप डिस्प्ले
Okay.
सेटिंग वहाँ पे चेंज कर दीजिए मैम.
Now?
Okay मैम.
Yes. Okay. Thank you. Good evening, everyone. And Saurabh, thank you so much for the introduction. Thank you, participants. So today our topic is going to be continuous controls monitoring, and there is a guide also by IASB on this particular topic. And we'll try to make it as practical as possible. I will try to take this up for 20-25 minutes, and then we will keep the floor open for any questions. If anyone has any questions, they can put it on the chat box and we'll take it up. So, okay, friends, have you heard this quite often that, someone tells you, oh, this audit is post facto, too late, we've already made a loss on this, or, process has completely changed now. What is the whole point of telling me now after 6 months, 1 year of something happening? Now, the very reason this, this needs to change or this comment has to change is when we look at, continuous controls monitoring. Now, what are the stakeholder expectations today? By stakeholders, I mean the management, audit committee, board, it could be various other people, but major statutory auditors. Now, what are their expectations? They want prevention of loss before it happens, like a trigger. Can you not give a prevention? Can you not give a trigger? They want a wider coverage. Sorry, am I audible properly? So, then just rechecking on that.
Yes ma'am. Okay.
They want a wider coverage, don't do just a sample. Now, if you put an annexure and show that, I did a sample review of 30 cases and in that I got 5 cases. Now, people are not very happy, where, gone are the days when you say that, this is representative of the population, etc. They're looking at something which is larger, and that too at much lower cost. The cost, they want to reduce the cost, but they want a larger coverage. They want a real-time reporting and lower turnaround times for informed decision. They don't want lengthy report. They don't want that, after everything is done, you come at, like after 6 months, 1 year, you come, you do the, work, and then you come back to them. How are they going to take any informed decision on that? And they want a continuous assurance on the controls that, yeah, it's not like build a control and then it was working for some time and then it stopped working, then it's again working. Now that could lead to a lot of losses. Banks have had a concept of concurrent audit. The next speaker, Madhu, would be talking about concurrent audit. And now most of the other industries want to replicate something of that sort. And a continuous control monitoring is basically some sort of an aspect on that. Now, what are internal controls? So before we move to, what is continuous controls monitoring, let's see what is internal controls, and the very thing is that, you have the processes which are designed and implemented by those charged with governance, like the management and other personnel. They want to make sure that the entity's objectives with respect to reliability of financial reporting, effectiveness, efficiency of operations, safeguarding of assets, compliance with applicable laws and regulations is in place. Let's look at the evolution of internal controls. So, we had first completely manual controls. I think some of the panelists from the previous times were like, previous session was saying during our times, if you think about anything which is more than 15, 17 years back, even when I did my articleship, we did a lot of audit or a lot of work which was manual. All the sales registers were manual, a lot of things were manual. Then we moved to a little more system-based automated controls. We had Tally, we had SAP, we put some controls within that. Now it's moving to more of tech-based controls. And of course, there's further movement to it, where we have used various technologies for internal controls. What is continuous controls monitoring? Now, continuous controls monitoring is that, where we were doing or we are doing audits or controls on, say, a monthly basis, like, if you do a bank reconciliation statement on a monthly basis. Continuous control monitoring will do it more frequently, maybe on a daily basis. Sometimes it could also be like 3-4 times in a day. It's automated. Basically, it's through the system, it's through some tool. It's proactive, it's not reactive after something happens. It's generally very proactive. It has a reduced human intervention. And most importantly, when we talk about continuous controls monitoring, it is assisting management. We have like 3 lines, which is first is, the process owners. Then you have the heads of departments. You have the internal audit. Now, this particular thing is that, if you read, and we've always read that controls, building controls, having them is the management's responsibility. So this continuous controls monitoring is actually for assisting the management. And this is to make sure that, the risks are brought down to the acceptable levels. What is the need for continuous controls management? So we've already said, in terms of it would assist you in timely decision making. So, if there's a flash report which comes in and it shows that there's almost, we're going to run out of inventory in the next 15 days, and generally it takes 10 days to refill inventory. If you wait for like, 15 days over, and instead you have a trigger in the system, it will tell you to take the decisions, quickly, that, in the next 3-4 days, we need to order for more inventory. Internal financial controls compliance. What does internal financial controls definition say? That, you have internal, you have controls which are not only designed, but they are operating effectively. Now, when you're talking about operating effectively, they want to say that, you have to continuously ensure that they are in operation, and they are not in operation only towards the end of the period. They are in operation and they're continuously there. So if the management, the CEO, CFO have to sign off that, we have internal financial controls and they are operating effectively, they should be able to do this if they have a mechanism for continuous controls monitoring for very important ones. it could help you from reducing a lot of losses. It could happen that there is some cyber attack, and basis which there have been some duplicate payment which has happened, or someone's actually stolen money from your bank. It'll help you reduce the losses. There's continuous compliance. There are a lot of aspects where we need continuous compliance. A human may sometimes miss that, but a system could probably not miss it. A tool may not miss it. It would be more cost effective because it will work 24/7. There's higher return on investment on that. I mean, in the last 1-2 years, with the whole COVID coming in, there have been a lot of emerging risks, right? From cyber threats, we have technology related risks. Recently, we've all been, there and on the receiving end in terms of resource risk or resource retention risk. There's a lot of attrition. Infosys and a lot of IT companies have put in that they've had 25-30% attrition rates. We have third party or nth party risk, where you've outsourced your payroll or maybe your payments process somewhere. There's a lot of risk where your data is going out. This will improve your business process. So, if you know and you understand, you're taking timely decisions, you're going to overall improve your, decision making. There's quick adaptation to changes, when you are using a tool, and of course, improve governance. So when you have the entire system doing this, you will have transparency. You'll have an entire trail of how the documentation was done, where the issues were. So you will have an improved governance and transparency mechanism. And these are just some of the aspects in terms of why continuous controls monitoring is important. Now, what are some of the aspects that you need to consider before you move or embark on the journey of continuous controls monitoring? So, what is the cost and benefit? So if I put a control in place using a tool, what is the cost of that? And what is the benefit? What is the return on investment in the next 2 years, 3 years, 4 years? Does it make sense in that way? And what is going to be my loss in case I don't do it? What are the consequences, not only in terms of loss, but do I have a reputational damage if something happens? Do I have a financial loss if that happens? Do I have prosecution implications? Now, these are the aspects that you would consider. Resources, do you have the infrastructure? Like, even if you put a tool, is your existing ERP going to be able to talk to that? Is it going to be able to give the data in the way the tool can be able to assess that? Do you have your own people who will be able to understand this? Are they trained well enough? Do you have a roadmap? We are going to talk about the roadmap in the next few slides. You can't just embark on a journey. And again, what is your governance mechanism? I mean, do you have like an organizational structure? Do you have at least some bit of responsibility matrix identified? Else you will automate a control and there will be no one to look after that entire process or the follow-up mechanism of the results which come out of that. So what are the continuous controls monitoring implementation steps? So first you will need to identify the priority areas. Then you need to identify champions. So you need to identify people within your organization who will own this entire CCM right from start to end. You'll have to determine what are the process frequencies. So, there will be some controls which you will need on a daily basis. Some you may need multiple times during the day, and some you may need only like, once in 10 days. So you will set the frequency and the monitoring rules. You will configure the parameters within the system. So, you will say that, okay, I need debtors aging, alert. You will put those 5 parameters in the system in terms of, okay, my aging brackets are there. If it breaches this particular level, it will give me a pop-up. So those configuration parameters will be put up, and then you will follow up. So once you get the results, you will follow up in terms of how this entire implementation is happening. And then you will communicate the results. In terms of what has happened, you will have a user acceptance test, then the people in charge will know what they're supposed to do out of it. So these are the broad aspects or implementation steps of continuous controls monitoring. Now, it's also important to look at what are the control characteristics. So the main control characteristics are preventive. Basically, you have a preventive control where, it's built within the system that if you do this, you'll need an approval before you go ahead. That's a preventive control. A detective control that, after it happens within a particular period of time, you will know and you'll be able to detect. Then you have a directive control. You have a policy guideline and you're directing the, people in terms of what they're supposed to be looking at. What are the compensating controls? You may have a control, there could be an error, and then what do you do to compensate that to make sure that at least things work fine? Then there are manual controls that's completely out of the system. They're not within the system. You can't put them in the system. There are IT dependent controls that you get a particular report from the system and then you disseminate that. I mean, something like, you have outstanding accounts receivable, you get the system report and then you disseminate your IT dependent. And then you have an automated control, which is completely in the system. Like if you have a three-way check, which is built in, it's an automated control within this. Now, why is it important to understand this is when you understand that what could be the controls that you need to automate, or what you should have a continuous controls mechanism to do that. Now, to do this, what you need to do first is to do a dashboarding of controls. So this is just an illustrative list, how many controls do you have totally in the organization? You can have an indicative number, and how many are key or non-key, how many are going to impact the financials and how many are not going to impact, how many are preventive, how many are detective, how many are new controls which have been built over a period of time or during this particular period. Then how many are automated and how many are manual? See, if you see that the automated and manual control, the bifurcation is a lot, that there are way too many manual controls and very little automated controls. You slowly and steadily prioritize. If you go back to the previous slide where we said we will have establishing priority areas. So you'll identify out of that which ones are the most important ones. Now, let's look at some practical aspects, okay? And, which will give us a little more insight into what is, how controls can be continuously monitored, or which controls should be continuously monitored. Now, if you have a payment gateway, and they have a system set in where you have, your rates of service charge are different for different type of transactions. Now, for some reason, if there's a system bug and the rate charged is incorrect, then the amount that you lose per day is quite a lot. So that is the reason you need to have a revenue assurance on a daily basis or a trigger if there's an incorrect rate that is being charged. Now, these type of places you may have almost a daily or maybe multiple times during the day control put in. Then you have, you may have sensitive information right from customer data, in a quick service restaurant, or you could have, price sensitive information. Now, if you do not deactivate or modify the logs based on people moving out or your staff moving out or staff being reallocated, you will have a problem. That is the reason there needs to be a continuous monitoring on that. Then you have compliances, there are various compliances which you need to, there are critical compliances of RBI, FEMA, SEBI, which may need almost a daily or fortnightly compliance. And if you don't have that compliance in place, you could have penal prosecution implications, leave aside the other reputational implications that you have. Now, if there's a new manufacturing company and they've launched a new product, they want to know if it is making adequate profitability. They will want to do a continuous monitoring instead of once in a week or once in a fortnight or once in a half year. Then there are commission payouts, that happen, suppose, and that is again, suppose a daily payment for a multi-level marketing company. And if the commission payouts that are happening are at an incorrect rate, again because of system bug, then you would want to see it on a daily basis. Duplicate payments, haven't we all seen that? So, identifying and, putting things in place for duplicate payments would be very important. So these are just some of the general examples that have been given where controls can be continuously monitored. Now let's look at some of the real life examples for continuous monitoring. If we see credit card companies, they block any unusual transaction. So if you're doing a transaction generally in the range of 10-15,000 and in certain particular vicinity, and they see that at an odd hour you've made some odd transaction, they'll probably block that transaction. That's a continuous control. There are some companies which have like an auto-generated SMS which goes to the CEO if they see any unusual transaction. It could be a purchase, it could be a sale, anything. It could be a payment. Even if there are other controls, there is still an auto-generate that can go. If there is a potential virus threat, there is an alert which goes out. If there is near expiry products, especially in the FMCG kind of market, There are auto generation of reports, and emails and escalations which go out. Then within the compliance softwares, there are alerts in case of potential statutory non-compliance. Before something goes wrong, they give you an alert. Let's look at some case studies as well. Now you have, suppose in the procurement to pay, you have, a duplicate payment process is a risk. What sort of data analysis can you do? You obtain the purchase order data. You validate if that there are duplicate payments, and for the same vendor or the same account were processed on the same day. Then you have order to cash, if, from the whole credit management perspective, where sales orders are booked over and above the credit limits set. What you do is you compare balances with the credit limits and report exceptions. Payroll, if you have ghost employees created, identify and report duplicate bank account, Aadhaar number, any social security related number that you can use. You have inventory. So if you have excess short inventory leading to inventory blockage or understocking, you identify inventory held in excess of maximum or minimum levels, so that there is no inventory blockage and there is no loss of sales as well. So these are some practical case studies. There's many more examples of this practical study in a book which has been published by IASB. We'll be happy to share the reference. It's by ICAI only, so you can look at that. Now there are various tools which can be used to facilitate the continuous controls monitoring. So you can have predefined macros which are there in Excel, very cost effective. You don't need to, so it could be a small or medium enterprise and they could still use a macros. There are audit tools like IDEA and ACL which can extract data from accounting software and perform predefined procedures. There are robotic and artificial tools. Again, there are very cost-effective robotic and artificial tools, intelligence tools also which have come up. There could be data analytical tools. There are various tools in the market. So these are tools which can facilitate continuous controls monitoring. Now there are limitations and potential roadblocks which can come up when we are doing continuous controls monitoring. There is one inherent risk of human collusion. We've looked at the fraud triangle or something, that what you cannot change a fraud or anything is if 2 or 3 people get together, you can do nothing about it. Then there's an inherent risk to that. It is highly technology intensive and you need to have a mindset. Small medium enterprises may not have that much mindset, so changing and explaining that to them with the potential benefits becomes very important. There's dependence on manual records, especially at the SME. I mean, if you see, they have a lot of manual records. They may have tally, but a lot of things are more like a daily entry on a bulk basis that go in. So the other things are manually maintained in Excel or maybe some other type of registers. So the data readiness is not there to apply a tool. And the senior management is doing multiple things. They may not have the time and the attention, they can give to the entire controls monitoring. And this needs continuous review and upgrade. So now, if you come up with results and someone's not going to use it, it will again become a waste. And then you'll have to keep updating it based on what changes have happened. So this is broadly based on, on the continuous controls monitoring. I would be happy to take any questions. Is there anything that, anyone wants to share?
Ma'am, hello, I'm Ruta Chitale and I'm coordinator for today's program. But I'm right now do not see anything in chat box from the participants. So if I do, I hope you will be there for some more time. So if we have some questions coming up, I'll definitely address them to you.
Sure.
And
sure.
So here we are at the end of your session, or you want to share something more?
No, so the only thing is that people. Yeah. So I know just that, people can, refer to the IASB note and also research on that. And I'll be happy to take up any answers offline as well. So I think that's about it. I think the next speaker who's going to speak on, so I have Madhu who's taking a similar topic, but more from banking side. She, are talking about concurrent audits. So I'm over to you, Madhu.
Hi, Rachana. Thank you. You really explained a lot on this continuous monitoring thing, which also is one of the basis for the way we look at concurrent audit at banks. So we have a set of processes that we run through on continuous monitoring basis. We use a lot of data analytics to make sure that our processes run as intended. So yes, I will be. There will be some. Sorry.
Madhu madam, before you start your session, I would like to introduce you. Is that fine with you? Yeah. So this audience would understand from what background you are coming down from. So Madhu Sippy is working for Axis Bank as a lead concurrent audit. She has an experience of close to 18 years plus with Axis Bank and has also worked in retail liabilities and presently using this knowledge of retail liabilities for better concurrent audit output. She has also completed her postgraduate diploma from NMMS. So thank you, Madhu ma'am, for being with us here today, and we are eager to hear some more things about concurrent audit, because really speaking, it is now a very risky area from, at least from my point of view. It has become, you know, whatever happens there, it's put on the concurrent auditor, kind of. That is what my perspective is. And I hope that you would tell us some idea and risk areas where we need to take care.
Yes, I will run through everything that you want me to address. Firstly, before I start, I would just like to understand if people can see my screen and my PPT. Is it visible, not visible?
It is visible, ma'am.
मैम विजिबल
Okay.
Yeah.
Okay.
मैम थोड़ा हेलो सिमी मैम आपके थोड़ा फेस के सामने थोड़ा लाइट दीजिए ना, थोड़ा ब्लैक आ रहा है फेस.
Okay, now I really don't know how to
go to the slideshow.
आपके पीछे साइड में मैम ज्यादा उजाला है, इसलिए आपका फेस है ना.
Okay. Do you want to see my face and not see the content of my presentation?
No. Ma'am, both things would be
No, I'm just joking. I'm so sorry.
Yeah, now this is perfectly fine.
Okay. So concurrent audit, I think I've been with Axis Bank for 18 years, and concurrent audit is a piece that I've been managing across for the last 4 to 5 years. For me, concurrent audit is extremely critical from the standpoint of transaction monitoring, because the concurrent audit piece that I'm handling talks about branches. And at branches, the volume of transactions are always on the highest side, especially in case if you're looking at the retail part of it. So a concurrent audit is nothing but it's a timely examination of a transaction, be it financial or not financial. Say, for example, if I've gone to a branch and I have done a cash transaction, so it becomes my financial transaction. Whereas in case if I've gone to a branch to do an address change, a mobile update, a PAN update, or an Aadhaar update, it becomes a non-financial transaction. What these concurrent auditors at branch do is basically they examine end to end of every activity which happens at the branch, and they do it on an ongoing basis. So this basically works as an early warning signal for the bank. Assuming a cash payment is hit as a cash receipt, the cashier will get a cash shot since the accounting entry in the book is wrong. Assuming on that day, that particular voucher on which the transaction is hit is not available to the branch, the cashier, poor fellow, will have to pay the money out of his personal pocket and will have to make good the loss to the branch that the branch would have faced during the course of the day. Secondly, there would be a mismatch in my voucher count for the day, which is a part of a system report that comes. What concurrent auditor does is, one, it will help the branch identify that the transaction was wrongly hit. Two, it will tell the branch that a particular voucher in the day book has gone missing. So at every level, the concurrent audit helps in making the bank aware that a particular transaction is wrongly done, or a voucher is missing. It is nothing but it helps in preventing, or rather minimizing, the risk of a fraudulent transaction which happens at the branch. You could even take it as a part of back office, because large banks, especially like Axis, SBI, you take any private sector bank, they are a part of Concurrent, and their back office units are also, also a part of the Concurrent audit system. The reason why a bank's bank office is a part of the Concurrent system is only to make sure that the number, because the volume of transaction that a branch handles at the bank is extremely large. So Concurrent helps in that manner is that it gives you an additional checkpoint to go and just confirm that whatever has been done in the branch, at the back office, or at a treasury unit is just right. It feeds into the requirement of the bank. That means it takes care of our internal guidelines as well as it takes care of our regulatory guidelines. Now, as a bank, in case if I was to talk of Axis, especially, the focus of our Concurrent audit is typically our high risk units. So what happens is at the beginning of the financial year, we develop an audit universe. Now, this audit universe could range from my branch, it could go up to my treasury back office, my account opening team at the back end, the team that makes modification to my account, my digital banking head, my call centers, the list could go on, so on and so forth. So what the Concurrent audit at the bank does is basically it looks at key high risk areas. Now, it could also look at areas which have a high financial impact, or it could also look at areas where the audit rating of a branch or retail liability branch has been significantly poor across the last 3 years. So I'm sure each bank has their own database which helps them to identify which unit is high risk, which units have poor audit rating. And mind you, when I say high risk, we are only talking about the residual high risk, or where the inherent risk in the system is extremely high. So when I get my residual, I am either talking of a unit being high risk, or I am talking of a unit where the inherent risk is extremely high. Concurrent audit also looks at various processes, especially like account opening. The reason being the regulator is very strict with the bank when it comes to account opening, when it comes to KYC lapses. There is a lot of guidelines that the regulator has issued when it comes to KYC, AML checks. So the reason these units are under Concurrent is because a lapse in the regulatory guideline is taken as a critical deviation for the bank and can also cause a penalty. So to avoid that, we always ensure that every business process is put into Concurrent audit. Now, audit does not decide whether the unit has to go in Concurrent or not. While we feel that a particular unit at the branch or at the back office function is critical, is high risk, we also take approvals from their stakeholders. Now, who these stakeholders are? These stakeholders are nothing but their business heads. Does the business feel equally that yes, that unit has to be audited or should be under something like a continuous audit mechanism? Look at a process like dedupe. What is dedupe? From a bank standpoint, I can have a credit card with the bank. I can have, I can have a travel card with the bank. I can have a relation of CASA with the bank. I can also just do a foreign retail transaction. For all this, what the bank does is it creates a unique customer identification number. Now, as per the regulatory guideline of the bank, every customer should have only one unique customer identification number. What happens is Concurrent audit will tell that business unit that there are multiple such scenarios where the clients are either maintaining different customer IDs or their customer IDs are still not in the process of merger, or in some cases it may say that mergers are not possible. So go ahead and close the account. So here it is the business who needs to take that call whether what the audit is saying or what the business is saying, is it right or wrong. So the audit will always get in consultation with the business unit to decide whether the unit has to be in Concurrent or not. Now, earlier, it used to happen that RBI had given out a regulation that 50% of my bank's advances and deposits would be under Concurrent audit. That requirement has been done away with through a guideline issued by the regulator in November 2019. If I'm correct, it is 16 November 2019. Now it is the board's individual decision. So at the beginning of the year, when I call for my audit universe, I decide who my auditees are going to be during the year. I take that individual call whether a unit has to be in concurrent or need not be under concurrent. The decision rests with the bank. Am I clear? Am I going too fast? Am I going? Is there something that nobody is understanding? So please let me know. Okay. Now, how does the bank arrive at this process of concurrent audit? Every bank obviously has their own process. It obviously starts with selecting who my audit firms are. Now, we have a ranking mechanism where we rank the firms in terms of number of partners, the years of experience that the firm has in the business of concurrent audit, what previous banks are they auditing, of course, what is the fee that they are charging, because as a bank we also do have our budgets to take care of. So the first step in obviously looking at a concurrent is to see who my audit firms are and then screen them. So when I say screening, it is number of partners, the rate that they are asking, the number of years of experience, and whether they are also empaneled on our Axis Banks, whether they have done any of our Axis Bank's previous audits or not. Once I have selected and I have screened this particular firm, I run them through a price negotiation committee to see whether there are firms that are available elsewhere who do the same nature of activity at a price that is reasonable enough for the bank to say yes or no to. Is the price good enough? Is the number of resources that they are deploying, are they good enough? Do they have the right kind of technical knowledge, whether they have the right kind of skill sets, whether they understand banking as we want them to understand? And once we are sure that yes, the firm meets all these criteria, we go ahead with the process of appointment. The appointment letter is issued by the central teams of bank's internal audit system. It goes to the audit firms, and that's where they start their commencement of the audit. Now, earlier, it used to so happen that these my concurrent audit used to be done only by my CA firms who are rightfully entitled to do concurrent audit. Now, as per the revised guideline by the regulator, my bank's own internal staff can also do concurrent audit. Just a requirement being that one, they have to be in a rank which is senior enough that allows them the liberty to do concurrent audit at branch, and two, my audit policy of the bank approves their appointment. So once both these steps are followed, anybody who has been with my bank in a designation senior above as the bank considers fit can continue with concurrent audit. Okay. Here again, I have said that the bank has to decide who is going to be doing what units are going to be placed under concurrent audit. Whatever concurrent units I decide are going to be as a part of my annual plan, obviously will run through my audit board. Their approval will be taken in the first meeting of the audit board at the beginning of the financial year. The annual review will not only state what is my audit universe, what is the scope of the appointment that I have asked the auditors, what are areas that's going to be covered by my audit firms, what is the remuneration I am offering to them, what is their skill set, and whether there are any regulatory actions that have been taken either by the IBA or ICAI or any regulatory firm when it comes to performance of these audit firms. Now, once I have appointed an auditor, I also evaluate their performance. Normally, a bank appoints concurrent auditors for the period of 3 years, can be extended up to 5 years. But I have a mechanism to review their performance. This review for me happens in 6-monthly basis in case if the performance is good. What constitutes my performance parameters would be my quality in terms of how good they are reporting their report, When I say quality, quality would also mean the depth of my my audit report in terms of how deep have I gone in understanding an issue. Is it very superficial, just on the surface, or whether I have deep dive to understand what the issue is all about? In terms of clarity, how clear is the observation? Sometimes the auditors go round and round, and the essence of the observation doesn't come out. So one of my review parameters obviously comes up onto the clarity portion of it. The third aspect is understanding of my bank's guidelines and the regulatory guidelines. Now, while RBI defines their own guidelines and nothing supersedes what the RBI says, the bank also develops its own internal guidelines. Now, when I have my internal guidelines around the bank, I also have to check whether the auditor understands it, whether it comes out sufficiently in the audit report. Say, for example, in an area of AML, you as chartered accountants, you all know that there are guidelines of the regulator around AML. But sometimes when the issue comes out, it is not an AML query. It is because it is just a perception that you feel that, yes, the query could be an AML, could be a breach of a KYC guideline. Just to give you an example, PAN card is not collected at the time of account opening, becomes a KYC issue for most concurrent auditors. It is not a KYC issue. Reason being, for the bank, PAN is basically an NST, is an IT requirement when it comes to a cash transaction 50,000 and above. An ID document could be an Aadhaar, which could be very well there. Could be a passport, which is also an identity proof. Non-availability of PAN does not make the account a KYC discrepant account. So there are some things, some guidelines like these that we continuously check up on these auditors. And obviously, there is a detailed checklist which is shared by every bank, has their own checklist, and we do share it with these concurrent auditors. We give them hand-holding in terms of trainings, in terms of the product and the process, because every bank, at least of the nature of size of Axis, has a phenomenal change in the process anytime there is a new product launch. Now, our bank is going very digital. So there are some processes which are fine-tuned to meet digital requirements. So we make that effort to go and train our auditors. We handhold them. We make sure that they understand the bank in the manner we want them to understand. And there are some times that they bring out amazing audit issues that point out towards design failure or could point out towards process failures. All these concurrent audit findings, we then take it to the audit board saying that, yes, there is a glitch here, which has been identified by the concurrent auditors and which needs to be addressed. So we then involve IT, product, business, whoever we need to make sure that these shortcomings in the concurrent audit reports are addressed. This I have already spoken. In case of performance evaluation, so 6 months is a good enough performance evaluation. But in case if the firm lacks quality, despite a training or despite a handholding, and the quality does not improve, then we decide whether we need to sit and give them trainings, or whether we just need to move them out of the banking scenario. So whatever we decide is a part of our scope document, which is given to them at the time of onboarding. And in case if their quality of reporting doesn't improve, then we decide to terminate that particular assignment. So one thing that I would like to add is, for a lot of people, concurrent audit may not be an activity that gives value. Well, it doesn't operate that way with us. in terms of value-driven insights, a management gets a lot of data from us. We obviously tell them what are critical issues that are pending at the branch levels, because obviously since I'm taking care of branches, I can tell you there are dashboardings we release to the branch, to the top management. Now, these dashboards are a form of which cluster, which circle, which branch has maximum number of audit issues which are open, which branch report is pending for closure, reasons for the reports not being closed, because as an audit, I cannot give a report and then not expect a closure for it. So all these performance driven matrices we give to the management, which of course gets factored in the key result area of the branch at the end of the year. And that's how we help the management. And we also help the management, in case there is a new product launch which has just cleared its UAT, and it's just given new to the branch. So we ask these auditors to cover it as a part of their ongoing mechanism to see whether there is any glitch in the system that prohibits a particular transaction to be processed. Just to give you an example, earlier there was this thing of an education cess and KCC cess, which was introduced by the government, which is now been obviously taken care by service tax. But there was a point where the system was not recovering these cess as intended, and it was rightfully pointed out by our auditors. We happened to take it with the management agreed, and this insight was helped in was taken and given to our revenue and cost team to see what is the level of income loss that the bank has faced by just not recovering the point whatever cess that was there to be recovered, or for that matter TOC, that's the turnaround commission, turnover commission, I'm sorry. Most of our bank branches are nodal branches. They obviously engage into a whole set of government business activities for which we get income from the government or RBI at quarterly rest. It is these concurrent auditors who certify whether the value that has been given by the respective business unit in terms of number of challans, value of challans, whether these are right and wrong, whether these are good to go to the regulator in the form of reporting. So they give us all the certification, and these certifications are nothing but it just acts as a cushion that, okay, our data is working as intended, our controls are working as intended, and in case there is a failure, then we know which area to plug it in. We also have concurrent audits in currency chest. Now, currency chest also has this huge volumes of cash that they handle over on a day-to-day basis. So obviously, as a chest, I have a lot of regulatory requirements when it comes to my physical appearance of the chest. I need camera, I need note sorting machines, I need note counting machines. I need CCTV surveillance. There are hundreds of parameters that the regulator gives me when it comes to currency chest. Now, I, as a business unit, obviously can't go and verify whether on the ground all of this is working or not working, whether vans have those hooters in the installed or not installed. So as a business or as an operations team, I cannot go and check. It is these auditors who give me a weekly confirmation. Yes, the hooters are working. Yes, currency chest vans adhere to the requirement. The RBI is asking them. Yes, the cash is moving as intended. Yes, the reporting in ICOMS is moving as asked. So all of this, there is a comfort that these auditors give to the business unit, and obviously that is the need that we need these auditors on ground. So I think I'm done with my session on concurrent. I think I can go on and on about concurrent. I've been doing this for a very long time, but yeah.
Thank you, Madhu madam. I think I'll just talk to Mishra ji. If there are any questions on these two things, we would like you to
Yes,
display
please.
them so that both the speakers can have a look at it. Mishra ji.
क्वेश्चन है उसको दीजिए सामने देखिए.
Yeah, sorry. Yeah. Ruta.
Yeah. Rachana ma'am, you are also there, right?
Yes, I'm there.
Yeah. Madhu ma'am, please be there if at all there are any questions coming up for
Yes,
you.
yes, I'm very much around.
Yeah.
I
think this is related to Madhu madam only. Rachana ma'am, you can also have a contribution to this. Too much regulation and presentation as far as considering that CA or audience, this information is redundant. Can you please give practical issues that you come across when
आपका माइक बंद चालू हो रहा है मैम.
Okay. Rachana, are you giving your feedback?
It's banking. I'll leave it to you. It's banking. So I'll leave it.
Fine. Okay. So, as far as regulations go, nothing becomes redundant, is what I believe, having worked with the bank for 18 years. Yes, there may be some guidelines that go on and off, but they do have relevance when it comes to the way we do things at Axis. Practical examples in dealing with an audit firm. See, I would tell you at Axis, we have a report release deadline. We have to go to these firms and make them realize the importance of a report being released on time. Now, with a scenario like COVID, that's actually prohibiting our chartered accountant firms from visiting branches, and now this Omicron, the new virus that has come, our auditors don't want to visit the branch. So the practical difficulties that we face with these auditors is asking them to visit the branch, because a transaction analysis cannot be done sitting at home. We understand safety concerns, and we put measures in place in consultation with the branch and the controllers of the branch. When it comes to making sure that the health and safety of our CA firms are also taken care of. Second is, of course, in terms of knowledge. Most of these people who work on the branches, especially the interns, they are practicing chartered accountants. So they don't know banking as we expect them to know. So what comes out is really a transactional issue, which can be sorted just by a little conversation at the branch. What we tend to look out are process driven issues, whether a transaction has moved in the manner it was expected to move, or whether there is any lapses. In terms of KYC, we look at whether there is a breach of a KYC guideline. Is there a regulation failure? Is there an impact that RBI would see on a report, just looking at a concurrent audit piece, in case if I were to say? So we have to train these CA firms to make the team on ground understand what branch banking is, and which is very difficult in a scenario given the cost factors, because every bank obviously has a kind of a budget that it will have for a retail liability branch, because it's not just one branch that is in audit. I'm talking about 1,000 branches under audit. A cost increase by even 1,000 rupees will have a significant impact on my budgets. And since the management obviously tells me that I can't overshoot on my budget, so getting the right skill set, the right set of people with the right mindset again becomes one of the challenge. And business strategy to use audit. What we do is, as Rachana was saying, as a part of continuous monitoring, we have developed a set of exceptions. Now, these exceptions are basically a list of our process guidelines, our product guidelines, also guidelines looking at what NSDL is saying, what RBI is saying, or what SEBI is saying. And we predefine a set of exceptions. These exceptions are run into our SQL, which is nothing but our audit language. And we share this data in the form of an exception with the auditors. What we expect auditors to do is to make a meaningful analysis of the data that has been given and see whether this failure was an intended failure. That means, was it an operational risk that I faced because people were not aware of the process or the revised guideline, or whether it is a design failure, that a control has not worked as it was intended, or whether it is a compliance failure. In each of this level, the bank will be able to address the query in case if the analysis of the auditor is 200% accuracy, 200% accuracy and to the T.
Ma'am, I think this answer would also have an impact on the second question, which has also been put to you, that RBI structure, whether it would have any effect on concurrent audit approach. So I think our next speaker is also here. So please tell us that whether and Rachana ma'am, I have a small question to you also, just after Madhu ma'am's asked, and then we will move on to the next speaker.
I'm sorry, but I will not be able to answer the
RBI impact. The angle is perhaps that risk-based internal audit, when now the new guidelines have come into force, there might be the angle that whether the concurrent audit reporting, whether it would undergo any kind of change or would it be same. Can you just tell us the percentage of impact, how much it will have?
So in case if I'm looking at a risk-based internal audit from a concurrent audit standpoint view, I'll just tell you that every concurrent audit has been given a checklist from the bank. Now, when we talk about checklist, the checklists are so determined, as I told you, that we only put high-risk areas in our concurrent auditors. So our checklists are also defined in a manner that the high-risk and critical areas come out first. So whatever is little transactional can be addressed at a later point of time, which is not even so relevant, would be a transactional issue, sign mismatch, a stamp not there, a date not there. So those aspects we don't expect the auditors to cover. What we do expect the auditors to cover, that in case if a product or a process is critical from an RBI standpoint, then it has to be covered in a manner, and we give them checklists so that all the risks can be attended at one go and no risk is left unattended.
Thank you, Madhu. You were really the insight into the workings of concurrent audit, really beautiful. Thank you. I think it would really help the people who are attending the course to have an understanding of how concurrent auditor and concurrent audit is looked upon from the bank's point of view. Thank you very much, Rachana ma'am. Coming back to you, I had just one small question related to IFC. That as far as internal financial controls are concerned, you had stated very beautifully that it is not only compliance, but the operating, whether they are operating effectively, that is what can be the use of continuous process, continuous control monitoring. Do you envisage that the data, many times it so happens that the data comes in, the data is captured, but there are chances and risk of missing the interpretation or the analysis of the data, where the internal audit gives rise to the gap analysis. The point I'm trying to make here is that data might be captured, but what is the risk of not analyzing it and not putting the data into the correct perspective, and whether there is any such risk, or if at all it is automated, or as you said, now the risks are controls are more digitized, whether this risk is substantially reduced of not viewing the data at all.
If I understand your question correctly, is one is reporting is not happening. The data is captured, it's not reporting correctly, right? I think that's when you have the exception reportings or the alerts coming in, you'll figure out there are gaps. And one more important aspect of any automated control is that you have to keep rechecking the scripts or the back end of the data to see if there are bugs, within the entire, So the minute automated, we need to test it once in a year, right? Or once in more frequent basis. So if there's something which is wrong, which is coming up, you'll find it out. And then, of course, there has to be exception reporting. So there should be triggers which will tell you whether your automated control is not working. That's when you will have gaps in reporting also.
Right. And I think the review process is also important. We need to also update the reviews and controls on the review process. Right. Thanks, ma'am.
You need to use that data also, right? I mean, once you have continuous controls monitoring, you will have data, you'll have to use that, and there will have to be responsibility also for someone to review it and then act upon it.
Review the exceptions reporting also. Yes.
Yes. I hope I've answered it from what I've understood. You can connect all.
Yes. Ma'am, thank you very much. You were also I really like the fact that you have brought out the real life situations also in continuous control monitoring process. So thank you very much for that. And I think the audience can always connect with you later on also if they have any questions. Thank you both of you, Madhu ma'am and Rachana ma'am, for a wonderful session. And now we have with us our next speaker, Kartik Radia ji. Radia ji, I hope you're online. Yes, and before he begins his speech, I will take 2 more minutes, Radia, to introduce you because you have such a wonderful resume, and also that the audience would like to understand the way I think the topic is also very exceptional in that case. Just a moment. Kartik ji is a managing partner at Mazars India LLP. Mazars India LLP is a strong team of 25 plus partners and 400 plus team. He is based in Mumbai and has 20 years of experience in servicing large and medium-sized clients in complete suite of advisory services, GRRC, that is governance, risk, resilience, and compliance, FRM, that is financial risk management, also cybersecurity, forensics, you name it, and I think Mazars is providing it. Kartik sir has already worked directly as a part of execution team for internal audit, risk management engagements, and also cybersecurity engagements. Prior to joining Mazars, he has worked with large accounting firms such as PwC, EY, BDO, and also with WPP in New York. He has worked across almost very interesting sectors: pharma, healthcare, manufacturing, media and entertainment, IT, e-commerce, real estate, oil and gas, hospitality, and much more. He has also managed engagements in areas of complex risk modeling assignments, governance effectiveness reviews, and such kind of corporate resilience frameworks also. He believes that any consulting team must add real value and should focus on implementation effectiveness, and the advice must be contextual to the business. I think his belief would really help us also in understanding our today's topic, which is role of internal auditors beyond books, financials, and transaction. So I think really, if I go through his resume, even he has mentioned about how COVID-19 also is a turning point in human history and has a long-lasting impact on various generations for at least 3 decades, and which has lessons for all professions and professionals in all streams and spheres of human vocation. He's also a speaker at various forums and seminars at ICAI as well as ISACA, Institute of Company Secretaries. Kartik is a fellow chartered accountant, associate company secretary, associate cost and works accountant, CPA of USA, certified information systems auditor of USA, and a certified internal auditor of USA, and commerce graduate from Mumbai University. What a fantastic resume. What a fantastic resume. I'm so glad that you are here with us today, and we are really delighted that you would be sharing your insight into such an interesting topic that we have today. Thank you very much. Over to you, Kartik sir. Your volume, can you please increase a bit? Still not audible?
सर ऑडियो नहीं आ रहा है इसका सर.
Yes.
कार्तिक सर ऑडियो नहीं आ रहा है.
Audible. Yes.
नहीं सर ऑडियो नहीं आ रहा है.
Yes.
कार्तिक सर ऑडियो नहीं आ रहा है सर आपका.
सर फिर से नहीं आ रहा.
मैम आ ही नहीं रहा है उनका. नहीं सर.
मिश्रा जी, कार्तिक सर का ऑडियो ऐसे ऑन दिख रहा है, मगर आई थिंक
ऑडियो नहीं आ रहा है उनका.
Unmuted from your end.
I can hear you guys very well.
Yeah. Now sir, it is there. Now sir, your audio is on.
अभी आया
Alright.
सर.
No, my audio is always it's been start.
Yeah.
So can you people see my presentation or not yet?
Yes sir, PPT.
Can you see the PPT?
Yes.
Yes sir.
You can see the PPT, right?
Yeah sir, perfect.
Okay. So coming to the role of internal auditor, and I would go back to the very basics of internal audit. I hope the PPT is visible and I'm audible. Ruta ma'am, can you confirm that? Ruta ma'am?
Kartik, you're audible and we can see the PPT also.
Lovely. So I go back to the very basic fundamentals of internal audit. And it's very important to understand this first before defining and coming to the point on that what is the role of internal auditor beyond books and beyond financial transactions. So going into some of the definitions, basically whether we take the definition that has been given by the Institute of Chartered Accountants of India, and also going by the definition that has been given by the Institute of Internal Auditors in the US. Basically, it's an independent objective, assurance, and consulting activity. And that is designed to add value and improve organizations' operations. So very, very important points. In a very nutshell, it defines that what is needed of an internal auditor. It does not say that an internal auditor is required to do an audit of financial transactions. It does not say exactly, what is a real role or scope or the real objective in a very meticulous manner what it is, but at a very high level, the definition defines that it's an independent activity, it's an objective activity, it is assurance plus consulting activity, and that is designed to add value and improve organizations' operations. So that is a very, very nice and a very clear definition. So while it is assurance, which means that it gives an assurance of the state of activities and state of affairs, but it also consults, and it consults in terms of improving the organization's operations. And when we go into some of the minute details, basically it means that all the activities of an organization, basically from the internal controls, the governance risk functions, the continuous control monitoring was also spoken about, the risk management activity, the sustainability and compliance, and system process and assurance. All of this is within the scope of the internal auditor at a very conceptual level. Now, a very important question comes into our mind as to, if this is what it is to be, then first of all, what all have to be covered? What is exactly to be covered when we call ourselves as internal auditor? What all needs to be covered? And another important question comes to our mind, and that is, are internal auditors completely allowed to do away with the financial reporting or the assurance on financial statements? So these are the two very important points, that what exactly should it cover? And second is the assurance on financial statements, is it to be completely done by statutory auditors? So the role of internal auditor does not cover that. Now, these are two very fundamental points, and I think let's dwell into this further. So first of all, the role of internal auditor is very, very all-encompassing, all-pervasive. It covers all sets of organizations' operations, not just financial, not just, let's say, regulatory or compliance, but basically covers all sets of business operations. So very technically speaking, if a business organization is running in an inefficient manner, and if there is a fear of organization getting closed down, or there are fears of going concern, then of course that is also a part of internal auditor's evaluation, because as we clearly go back and see the definition, that very clearly says it's an objective assurance and consulting activity that is designed to add value and improve organizations' operations. So since going concern is very important, since efficiency is very important for a business to sustain, and therefore it is internal auditor's job to basically point out the issues pertaining to also improvements and also organizational efficiency and effectiveness. So very, very all-encompassing role. On one hand, you have statutory auditors who would plainly report on financial statements. There are very clear disclaiming of the opinion, or very, very clear disclaimers that are around in terms of what is the scope, in terms of what are the standards of auditing, standards of accounting that have to be seen, in terms of regulatory responsibility, even in terms of a standard of an audit report that needs to go. They're very, very clear definition of standards. When it comes to internal auditors, also there are standards, no doubt about it. But since the role is all encompassing, all pervasive, it is very difficult to really go back and pinpoint as to what an internal auditor was supposed to do, what he has done, and what he has not done. So while we go through this presentation in slightly more details, we will cover also what would happen if an internal auditor has not reported or has not covered specific elements. And these are some very, very important points for us to remember. It's also important for us to understand the models of engagement with the senior management and with the board of directors, that is people who are charged with the governance. Very, very important for us to understand that, because while the scope can be limited, but if you call yourselves as internal auditor, anything that goes wrong and for not having covered in the scope, I think that is also something very important as a part of the model of engagement, whether it is a complete outsourced or a co-sourced internal audit activity, for us to be very clear about it, and also be very clear in our communication when, as per the Companies Act, the role of internal auditor is also very well defined under section let's say 138, which says very clearly that what is the role of internal auditor and how the scope and the reporting frequency has to be aligned. So it is very important, even though your scope could be just 2 or 3 areas, if you called yourself as an internal auditor under the Companies Act, then it is important to be clear that what is the entire scope and what happens if you don't cover the required comprehensive and exhaustive scope. So we'll come to that point slightly later, but I would say there are 6 major important areas to be kept in mind. Of course, there are standards and there are very clear established practices around internal audit in terms of scope of the work, what it needs to cover, etc. Now the internal audit profession is very well evolved in India and also as per the regulatory standards, most particularly and notably Companies Act. So starting with as some of the most important areas which tends to define the existing role of an internal auditor, we would tend to cover internal controls, evaluation, risk management evaluation, and review of business processes as the foremost part of the role of an internal auditor, followed by a business context. I always keep saying, in fact, for last more than a decade, this is a very well evolved concept, and now it's very much part of the standards of COSO as well. Both COSO integrated internal controls framework and integrated risk management framework, and also the outlines of COSO on internal audit very clearly says that the context of the business needs to be kept in mind. So for businesses that doesn't deal with cash on the ground, and there are various businesses that deal with cash, there are businesses that don't deal with cash. For them, there's the context of controls over cash does not arise. Similarly, for organizations who deal with cryptocurrencies, the concept of even cash and bank will become over a period of time obsolete, because all they deal with as a high-tech company only with cryptocurrencies. So the context of business really needs to be kept in mind. The issues of the business depends on the context of the business, and that is very important for an internal auditor to understand. The third element is that yes, there are financials, there are transactions, but what is the big picture talking about? So the big picture is, let's say a business is established for a few years, it's not able to meet its financial and revenue commitments to its investors, let's say to its lenders, for example. There is a business plan and there's an ability to achieve a business plan that becomes a part of the internal auditor to very much cover as a part of his scope. If a internal auditor observes that there's a continuous default on achieving the business plans, on achieving certain commitments that were outlined to the investors and to the lenders, for example, that is very much a part of the scope that needs to be very well reported, although it's not very specifically outlined in a very particular area, but it definitely needs to be covered as a part of the big picture that an internal auditor needs to look at. Similarly, business model evaluation. It is very important for an internal auditor to understand what is the model of business, what is the revenue model, what is the profit margin and overall business model and a financial model looking like. And when I said business model versus financial model, it would also look at, apart from just a revenue and expense and business model, it will also look at the operating cycle and the cash conversion, basically that ability to consistently meet the cash and liquidity obligations of an enterprise. So business model evaluation, the futuristic and proactive going concern evaluations. And while going concern is a very set standard for a statutory auditor, it is also a very important element for an internal auditor to cover, because if an enterprise is not a going concern, there won't be an organization, there won't be senior management, there won't be employees, and there won't be even an internal auditor. So therefore, it's very important that a big picture is kept in mind. So the big picture consists of business plan, ability to achieve business plan that has been committed to the lenders and to the investors, the business model evaluation, and the futuristic and proactive going concern evaluations. So for example, if you were a cab company, before, let's say, an Uber came in, somebody like, let's say at that time we had Meru Cabs. If you are somebody like Meru Cabs or a telecom cab company, and let's say there are fundamentally a big amount of investments that have been made into the company, and then you would have seen something like an Uber or an Ola coming up, that would have raised a going concern issue for those kind of cab companies. Similarly, when it comes to some of the large retail formats, with the advent of newer models of e-commerce, and particularly, let's say, Geo, the retail Geo Mart, for example, it does entail doing certain amount of going concern evaluation. For example, if you were a telecom company, and you would have seen a very big different kind of a telecommunications avatar coming up in India, in the form of, again, let's say in the form of Geo, then you would want to do a going concern evaluation, being an existing telecom company. So these are some very important big picture elements to be kept in mind. Fourth is technology security and governance. And what I precisely mean by this is how secured are your systems on technology front, because most of your systems are actually exposed on the net, whether it is even your legacy systems or even your business applications like UX and UI. You're completely on the net. Your business is happening. Most of the businesses today are happening on the net. Internet has become a very important part of business model for any enterprise, and it is very much important to cover how secured are we in terms of cyber security, in terms of digital trust, because you are there online, and in terms of online, you may basically face a very big fraud or a very big loss if your systems are not covered. You may at times may not face financial loss. You may face a data loss in terms of loss of your very confidential customer, client, or even your recipe information of the products that you're manufacturing, or maybe some of your product designs, product specifications, and some of that. So it's very important to have a technology security and governance, and internal auditor need to be fully adapted with the right skills for technology security and governance. And technology effectiveness means, are we using the right kind of technology effectively to achieve the business goals? So for example, if you are an internal auditor for a company which uses Tally, let's say hypothetically, and which is let's say a 2000 crore or a 1000 crore or even 700-800 crore company in India, it would definitely mean as a very important part of your scope to cover the technology effectiveness. Are the right business applications in use? And I'm just giving Tally as an example. There could be various other kinds of technologies that may be in use as far as business processes and financial accounting and reporting is concerned. But it's very important to review the technology effectiveness of the business. And are these technologies fit for purpose? Are they effectively doing their job? Are they right, and are they the right fit for achieving the business plans and objectives? That's a very important part or very important area for an internal auditor to be looked at. Fifth is the eye of forensics. And I always say this, that the third eye, which I call it as an eye of forensics, to be kept open always when you do an internal control. You don't need to necessarily always sit and start doing fraud investigations. That's not the scope. Fully agreed on that. But at least the eye of forensic, that needs to be kept open, so that anything that is going wrong, your antennas and your eye should quickly tell you that here is an area that's going wrong. Please go and review it. So, and again, as auditors, I don't need to explain this area, but very much it means that an eye of forensic has to be there with an internal auditor and has to be always kept open for any kind of a wrongdoing that may come up, or any kind of even inefficiency, if not just a fraud, but even an inefficiency or some major things that are going wrong need to be kept in mind and need to be kept open. Sixth is the data protection and privacy, and why I'm bringing this up is because now it's very much a part of the requirements in India. It's a constitutional right. Privacy is a constitutional right. Very soon, we also have the data protection law coming into force very soon, at any moment or any time from now, and therefore it's going to be a very important area for an internal auditor to evaluate the privacy framework, privacy controls, and how is the organization prepared for data protection around privacy. It's a very important subject. It's just not about information security, but it's also about what kind of an information you can ask, how long you can hold as a personal data, how you have to deal with the personal data, what is the time frame for deleting it, and what is the time frame of even cleaning it and reporting it to the right authorities, and even about breaches, if at all they may happen. So that is a very important area. This is the existing role of an internal auditor. All of this, I've not said anything that is futuristic, anything that is visionary into this. But now I come to some evolving areas, and where I really mean that this is an evolving role for an internal auditor, something which an internal auditor is proactively supposed to be doing in future. And I call an internal auditor as an assurance, security, and governance champion overall. It goes beyond statutory audit, because statutory audit is all about financials, and internal auditor goes far beyond that. Something that has not come up as a loss in the financials, if an internal auditor does a very detailed, thorough exercise as a governance, as a security champion, and plus having an all-pervasive review capability or an assurance capability over all business processes, he can very well report things much timely and much proactively than even before it comes as a finding or as a qualification in the statutory auditor's report. And I come to some very important 7 important areas or perspectives here, starting with sustainability. I don't think that this area needs a lot of explanation. It's a no-brainer area. Sustainability is what everybody is talking about. Particularly the pandemic has also given rise to a very solid thinking, which was quite very much there, but people were just so much engaged in day-to-day activity. So the thought around sustainability prior to 2020 was not so much into focus, or particularly I would say in India, although it had got a lot of focus internationally. But I've personally seen that post 2020 and with the advent of COVID pandemic, people have accelerated their thought processes and also accelerated their expedition around implementations around sustainability. So the concept here is that financial goals, financial ROI, financial profitability and results are important, and that is what investors, that is what regulators, and that is what even the board of directors and senior management and everybody is interested about. That is what statutory auditor confirms. But sustainability is about far beyond saying that okay, you would have contributed a good in terms of financial returns, but what about maintaining certain sustainable goals, certain sustainable practices around environment? What good or what bad, or have you contributed positively or negatively to the environment, and that too at every step that you are dealing with the environment, with even and the concept of ESG is quite widened compared to sustainability, because it's just one part covered in the E part, which is environment, and therefore sustainability is to do with environment sustainability, but also social and governance. So what is an enterprise doing in terms of environmental sustainability, in terms of social impact, in terms of governance, that is regulating its own activities? Is it behaving in a governed manner or not? So therefore, an area of sustainability involves a lot of measurements. We have dealt with, as financial auditors or even as a financial discipline champions on financial discipline, we've dealt with financial measurements. Here is the measurement which is basically around not around financials, but more around the sustainability. There are non-financial parameters, so there are not going to be debits and credits, but anything that is about net zero and various other concepts around sustainability. But wherever there are measurements involved, I believe that auditors or chartered accountants, particularly even internal auditors for that matter, are very much well equipped to deal with the concept of sustainability and doing the right measurements, not just about the goals, but also about the results that have been delivered. Second is board governance, again a very important area. There is a strike trick here that an internal auditor reports to the board of directors, reports to the audit committee of the board of directors. So can it deal with the subject, or can it report on board governance? So ideally, an auditor may not report on board governance, but it can definitely be a champion on board governance, advising the board on some of the very good important practices around board governance, like board effectiveness and various other things around board governance, like board evaluation, etc. So that's a second very important element. And again, as I said, you don't have to report on this because you're not authorized to, because there'll be a conflict of interest because you're reporting to the board. So you can't take a view on the board governance and prepare an independent report, but you can very well be a guide and a champion on board governance to the board of directors. Third is the quality assessment of internal audit and risk management functions. This concept again is very well developed, and it's useful for matured internal audit and risk management functions to do a quality assessment once in every 2 or 3 years. But it's an external quality assessment basically that happens, and it's a very good to have. There is a concept of QAIP, quality assurance and improvement plan, and that needs to be constantly updated. But this is definitely an important area from an Indian perspective, because we are practically not seeing many companies maintaining QAIP, that is quality assurance and improvement plan, for internal audit and risk management functions. So again, an important area as far as India is concerned for the future as an evolving role for internal auditors. Fourth is change management and preparedness for various projects. So there could be some very important projects coming up, like let's say a blockchain implementation, let's say a fintech implementation, let's say a sustainability project implementation, let's say an ERP, a new ERP upgrade implementation, let's say a GST implementation, for example, or let's say an IFRS new standard implementation. All of this, the change management and the preparedness for this change management for various different kinds of projects need to be proactively reviewed before it is getting implemented. So much ahead of the time, an internal auditor needs to give a preparedness review report for the change management areas. Fifth is management structure, efficiency and effectiveness, particularly in terms of technology and enablement. So the entire management structure, effectiveness, management efficiency, and the effectiveness of management in terms of taking right decisions, implementing right decisions, developing right kind of business plans, ability of the management to even achieve those business plans. That comes with the advanced usage of technology also in various areas. So for example, if some of the processes are not automated, if being an enterprise of 700, 800 crores or 1,000 crore, if you still are using a manual ERP model and not even a manual, let's say a manual accounting package, and not even a proper ERP package, or maybe some of the proper tools like around RPA or some of those tools which are very important for today's organization, that comes as a very important area for an internal auditor to report as a part of management structure, efficiency and effectiveness. And particularly tech enablement becomes a very important area. Then comes the fitness for purpose evaluation for right technology. And again, this is very important area for selecting any kind of a technology for the future. It needs a right technology fitment. It needs to be reviewed also whether the technology is fit for purpose. What is the objective of implementing a particular technology? What is the architecture? Is it a right architecture? What are the right OEM products? When I say OEM means original equipment manufacturer. That also applies to technology products, because they also call as OEM for software manufacturers, basically the right products and licenses, basically. So right OEM licenses or a right software products, right implementation partners for the product, because the product companies are different from the implementation companies or services companies. Selection of both the right products and right implementation partners is very important. And how are we achieving the stated objectives? So that is with respect to fitness of purpose for evaluation of the right technology fitment. So that's again a very important area for an internal auditor to review. I would say it's an evolving role because it's not very well established at the moment. Seventh is so again, going back to 6, for example, in one of the implementations, like RPA implementations, there is a concept called the right kind of architecture, the right kind of an engineering architecture, and even let's say a robot or a bot optimization, which means that you would want to use bot not for every particular activity, but if there are some of the data tools that are available that can fetch the data and can give the ready data to a bot, then it would definitely mean that bot can be much effectively utilized. So that is called bot efficiency. So that is fitness for purpose, evaluation for a right technology and a right architecture, and how optimally it can be used. Seventh is learned opinion on business process governance and internal controls. At times, internal auditors are being asked to also opine on the right kind of controls, right kind of business processes, and even the fitness of business purposes, even the fitness of business processes to be able to achieve organizational objectives. So there are some learned opinions that are required, and it's very much an established practice to also give learned opinion and be an advocate on internal controls for the organization. So here is the futuristic role for an internal auditor as an assurance, security, and governance champion for the future. I now move on to some of the important areas to be kept in mind. Particularly, there are two things that we want to cover here. One is the audit planning, and second is audit execution. So let's cover the internal audit planning first. So risk assessment, again, no brainer. There needs to be a risk assessment before arriving at an areas of scope. We've got a limited bandwidth, so it's important to rightfully use this bandwidth into high risk areas rather than probing some of the non-risk areas and less impacting areas. So agreement on scope of work. Second is agreement on scope of work in writing with the senior management and those charged with the governance responsibility is very much important, because this scope of work, where it could be a two-way approach between an internal auditor and senior management and the board, but it can't be a one-way approach where, let's say, the senior management just decides and says, okay, this is a scope of work, go ahead and complete the audit based on that, because then it is senior management that is taking responsibility for the risks, because they have defined the scope. The scope has to be determined properly by a proper engagement between the senior management and the internal auditors, and of course it needs to be validated by those charged with the governance responsibility. There is a board of directors and an audit committee. Third is the adequate scope coverage, and terminology of internal auditor is now very well clear as per the Companies Act. So that needs to be kept in mind very clearly. Terminology of internal auditor as per the regulation and statutes, and what is the limitation of the scope of work. So if you just do two areas, let's say a production area or a sales area, and say that I'm an internal auditor, in my view, it is not a good practice to call yourselves as internal auditor, because you've just done two areas, and that leaves a very big area exposed without any third line of defense review, or without an external review, or without an independent review. So you cannot go out and call yourselves as an internal auditor to the external world just by doing two or three areas. It needs to be a proper and an adequate scope of work. Fourth is the detailed audit program, and this is part of the internal audit plan. Of course, execution of that is covered as a part of the next slide, which is on execution. But having a right program for the internal audit team is very important. Having a properly well-defined proactive calendar and its communication and adequate publishing of the same to the auditees is also very important. Many of the internal audit team planning for resources, planning for man hours, planning for let's say the number of man hours to be deployed for various auditing areas in scope is again very important element in terms of manning the internal audit team. 7 is models of execution, whether it's a co-sourcing or whether it is the fully outsourced model, or whether it is agreed upon scope for specific areas, and there are implications with respect to responsibility. If it's a full outsourcing, then of course internal auditor is responsible fully for anything that can go wrong, because the internal audit function is fully outsourced. If it's co-sourcing, basically it's a joint responsibility, and internal auditor is responsible for covering adequately the in-scope areas, but he cannot be held responsible for the non-in-scope areas. And this needs to be very clear in communication. I believe that reporting standards also will evolve as we go into the future, because Companies Act is a regulatory responsibility. There are not many examples of class action suits of negligence or gross negligence against internal auditors as yet in our country, but very soon this is going to evolve. And as we evolve, some of these disclosures will also go to the stakeholders, external stakeholders, as a part of annual report. and also to other stakeholders as to whether it's a co-sourcing or a full outsourcing model. Coming to point number 8, responsibility for adequacy of scope coverage versus adequacy of work execution. As I already covered that, the scope coverage responsibility, unless it's a fully outsourced model, is a joint responsibility. It cannot be left completely with an internal auditor in a co-sourcing model, because management has played a role in this co-sourcing, because management depends on internal auditor for certain elements of sourcing certain resources or getting some work done, but management is overall responsible for the scope coverage. However, for adequacy of work execution, because that is a proclaiming by an internal auditor that he has done that work, that execution that was allotted to him. So even if in a co-source model, an internal auditor is responsible for adequacy of the work execution. In a fully outsourced model, an internal auditor is responsible both for scope coverage as well as adequacy of work execution. I now come to an important element of importance of internal audit execution and areas to be kept in mind. Always a question is asked on sampling, whether 100% or sampling. Again, it's a part of the professional judgment. If you ask any chartered accountant or any auditing professional, it's a matter of professional judgment, no doubt about it. But with the tools that we have now around data analytics, around some of the capacity of the technologies to go out and do all encompassing few feed rules and ask for exceptions and get a report, extract report on exceptions, then you might as well want to take a view, or because it's possible to do 100 on a 100% basis in an automated environment, it is quite possible to take a view that an internal auditor is responsible for 100% of the areas where it was possible to cover it through technology. Second is usage of the right tools and technology. It's a very important area for an execution. So whether it is data analytics, whether it is SQL queries, whether it is all different kinds of tools that can be used, it's very important to also pay adequate focus on the usage of the internal audit tools. Third is data analytics and data assurance. Again, it's a part of the technology tool, but again, when we say data analytics, that helps you in terms of point number 1, in terms of helping the internal auditor to almost cover 100% of the transactions for audit. Fourth is engagement with management and process owners, periodic and interim communication. So when you start an audit, you just can't remain silent for about a month or 3 or 2, or let's say when an audit is to be done in 2 months or a month and a half, you can't just come up on the last day and say, okay, here's my report, here's draft report. You have to be in a very periodic engagement by way of giving status updates, by way of giving interim reports, by way of giving queries, by way of giving draft reports in a staggered manner over the period, and get a very constant engagement. So the senior most in the audit teams have to be in constant touch with the process owners, and that's a very, very important point for an internal auditor to be kept in mind. A constant engagement with the management and the process owners, constant engagement within the team members, and providing adequate guidance to the junior team members. Again, that's a very important area when it comes to internal audit execution. Sixth point is on the audit process workflow. It is always important and better to have an automated workflow of the entire internal audit process, because gone are the days when today we're talking about a digital world. Gone are the days that you will maintain all of these files in a very manual environment and keep them and file them in office, because anytime any kind of a damage can happen to the manual documents or manual workflows. So it's important to maintain a proper digitized audit workflow process. It's very simple. There are various tools that are available for implementing internal audit workflow processes. Seventh is the internal audit report writing and audit presentation, and I would always call these areas as the areas of art, areas of experience, rather than areas that can be taught in the classroom. These are the areas that require really on-the-job training. So on the job will help in terms of really crafting a very nice and a very clear. You don't need to be extraordinary in terms of using the jargons and very solid vocabulary. You can use a very simple language, but very, very clear and straightforward language. Even I see today, most of the senior internal auditors, if you see the draft report, sometimes I really wonder that why is the amount of clarity that is needed is not coming out. So it's really an art. It's a matter of experience. It's a matter of craftsmanship to draft a very good internal audit report. And it's also an art of presentation when you make a presentation to an audit committee by focusing on, as I always say, the big picture, the top down, the macro picture. So that is also a softer element. and the limitation of IA, and that gives a rise to, I think somebody just prior to me spoke about continuous control monitoring, etc. There are limitations of IA because it's not continuous. It is for a period, and it always happens in a periodic manner. So anything that is happening wrong at a given point of time, it cannot necessarily report on an immediate basis. So that's why we have concurrent audits. We have a continuous control audits, and we have even there are in some of the matured companies or matured industries like banking, etc. We also have we also have a continuous forensic or a continuous vigilance unit or a fraud containment unit or whatever terminology you call it, but it's a way in which there's a concurrent review or a continuous review of the transactions before even it happens. And you see today, if you do a large transaction of a payment on a bank, the bank immediately gives you a call in an automated environment to check whether you did that transaction. So those are the examples of continuous review and continuous monitoring where there's a limitation of internal audit. So this is the importance of internal audit execution. I still have some more areas, but I want to just check on the time so that we don't want to even exceed the time. So are we on time, or should we have less time? Anybody can confirm, please? So I'll continue since there is no response. So yeah, Rachana, do we still have some more time?
Pooja madam?
I think we are overshooting the time as such. It was up till 8. So yeah, I leave it on to you.
So I'll quickly conclude in next 3 or 4 minutes, maybe 2 or 3 minutes. Is that okay?
Sure.
So there are some real life examples, and these are some advanced applications for from an internal audit arena, and where some of the tools can be used. I always call it as data first. Data first. It's also helpful for internal auditor to deploy data and have a continuous repository, or actually the access of the data warehouse of an enterprise, because it's a repository and it will be very useful for an internal auditor. Likewise, robotic process automation. If business processes can be robotized, then why not internal audit program also be robotized in terms of doing the communication with the auditees, informing them in advance. It may not always have to be manual. So implementing RPA, checking on RPA, and to what extent is RPA effective, for example. Similarly, verification of fixed assets and inventories, again, very well. Some drones and some of the other technologies of physical verification can be deployed. Again, very useful and very much a good business case, because it helps you to avoid all kinds of traveling costs, etc., and can give you really live updates. Likewise, conversational artificial intelligence, again, it can enhance the stakeholders' experience, all the auditees' experience, or even the senior management's experience when they can get some of the output from conversational artificial intelligence, and in a very nice report, because all of this are some of the very, very nice reporting tools. A human being can converse with machines and can actually create a very nice and fundamental experience when it comes to even. So for example, imagine of a situation that you use a conversational artificial intelligence, walk up to an audit committee member can converse while you are sitting there as an auditor, can actually converse and can get the right reports by even when you allow them to access some of your internal audit workflows through conversational artificial. They can ask for some live information, and that an internal auditor can provide through conversational artificial intelligence. Last and very important point, there is a artificial intelligence roadmap which leads to a center of excellence. I always say that data is first process. So data transformation is first for any organization to achieve any kind of a digital transformation. Data transformation is the first. Second is the process transformation. So that happens through by way of automating business processes. Third is integrated business functions, because you can't have business functions completely unintegrated, like an HR or a finance function. They may because they are meant by two different people from two different backgrounds. The heads of the departments can have very different views in terms of how these functions have to work. What are the authority matrices? What are the authority matrices? What is the delegation of authority? And what is the organizational structure? They can't decide that in isolation. There has to be an organizational point of view, or an organizational theme here, based on which the processes, all different processes have to be integrated, because they are ultimately organizational processes. They are not individual processes. They're not processes that have to be invented and worked upon by individuals. They are organizational processes. So integrated business functions. Similarly, technologies. Today you have wide range of options in terms of technologies to be used. For example, you have got various options on ERP, various options on RPA, various options on IoTs, for example. All these different kinds of OEM options, business implementation partner options. It's very important that all these technologies, when you evaluate, when you bring them on board, the very important element to be observed is integration of these technologies, because you can't have a situation where one technology cannot be able to be integrate or talk to any other technology. So it's very important that this, because and these days people are really talking about converging into, so you cannot always, you will never have. So when ERP came in, you had an objective that everything should be integrated as business processes. So ERP was able to achieve that objective. But today, on ground technologies like UX, UI, IoT, on ground technologies, they have to be there because ERP has limitation. So you have to feed some of this information live through integrated technologies, and if they're not able to talk, then it's a very big issue. So integrated technologies level 4 and AI center of excellence. For any company, it's important to have a artificial intelligence, I would say, or a digitized center of excellence. And I propose here that internal audit leadership team should be a part of AI center of excellence as a business as a business process, internal controls, information security, technology evaluation, and governance champion, because that is his role. So he needs to be a part of this constitution of AI center of excellence within the company. So that's a very important role. Again, this is one of the futuristic roles. If I were to call it, it's not an existing role, but it's a futuristic role, a proactive, evolving role of an internal auditor for the future. So that's all from my side. I'm very happy to address if there are any specific questions. I believe there are no questions.
Saurabh, are you around here?
Sorry?
No, I was just checking. Is Saurabh around? Yeah.
Puja ma'am?
Yep.
Sir, Kartik sir, okay. Ma'am, thanks.
Yes, sure. So good evening to everyone present here today. I am glad to have got this opportunity to thank you all through this vote of thanks. On behalf of IIA India Bombay chapter and WIRC, I would like to express my gratitude to our speaker, CA Kartik Radia, the founder and managing partner of Mazars India, to have taken out time this today evening and have been with us here today with a beautiful presentation, very insightful, full of experiences. I think we should have got more time to hear you. Kartik, I really like the way you actually started with the summary and a summarized statement of role of internal auditors. I mean, the topic itself had been amazing. Role of internal auditors beyond books, financials, and transaction. This is what every management is looking up for today. And very beautifully, the kickstart of the session by you by summarizing the 4 points, which I'm sure everyone would have taken note of. The role of internal auditors is to be independent, objective driven, provide assurance, and have a consulting approach. So this is very, very important. And with overall all of this keeping in mind that we are there to add value and improve the organization's operation, this is something great. So I'm sure we all have got a great takeaways from your session today. And thank you very much for taking out time and giving this lovely presentation. Lastly, very, very important, I thank all the core team members and volunteers of WIRC and IIA Bombay chapter for organizing this webinar, and a big loud thank you to all our participants. You all have been wonderful, And we look forward to having your participation in more such interesting sessions ahead. So thank you everyone and have a great evening. Thank you.
Thank you, Pooja, and thank you all the organizers. Thank you.